very good morning. You're watching India Market Open. It's the very first day of summer 2081 and it promises to be an extremely busy week with lots of global events. You've got US presidential elections, FOMC meet, rate decision from Bank of England, wrapping up our earnings season. So it's going to be action-packed.
And the China NFP as well. So all of that. I don't think we've seen as packed a week from a global markets perspective as the one coming up. So exciting time to be a news anchor as well.
Unfortunately, a lot of uncertainty for markets. Yes, exciting times to be in the news always. Just to add to all of that election buzz, I know it's down the month, but it's again going to be very important, Maharashtra elections. And the outcome of those in the last week of November will also become very, very crucial. But perhaps a little more uncertainty this week. Remember, Diwali Muhurat trading was okay. A little bit of optimism was tried there, but overall it has been a dismal October. And will November continue in that vein? At least initially is the question. But let's get the global setup for you before we move ahead and talk about Friday trade in the US. US stocks rallied on Friday trade, largely because of good results from Amazon and Intel. In fact, Amazon was up 6%, Intel nearly 8% on estimates being beaten by their results. For Amazon, cloud business has done well. So you had that push coming in. This despite very poor jobs data. October jobs data was underwhelming with just 12 lakh new jobs, 12,000 new jobs added versus an estimate of 100,000. US Treasury yields rose despite the poor jobs report. 10-year was at 4.38%. Crude, meanwhile, has jumped. Crude has jumped after OPEC Plus has delayed production output increase by a month. Remember, OPEC Plus was expected to increase output by 1.8 lakh barrels per day from December. Asia is mixed ahead of an action-packed week, though. We mentioned some of it here, but there's a key China NPC meet. It goes on for the whole week, and here's where it becomes very, very crucial for India. You're seeing continued FII outflows. Will those increase if Chinese organizations, governmental organizations, announce measures which will boost their economy or seem to boost their economy? That really is the big, I would say, downside as far as India is concerned. US polls becomes key, crucial. We'll see 5th the voting starts. I think it's most likely you will see a clear result by the 7th, considering how tight the race is even now. And of course, the Fed meet on the 7th. So all of that is on a track. But I think the big event this week, and I just want to take a minute to talk about that, is Harris versus Trump. And I know you will see one side ahead depending on, I think, what your social media algos are and the polls you watch, but it still is a very, very tight race. I thought I'll just put together what their key promises are for the economy, because the strange situation is that the US economy is by all means doing better than expected, and both presidential candidates have come out and made big promises to spend. Either of them might not be too great for the economy. So let's look at what Trump is saying. Trump wants universal tariffs on all imports from all countries. So even from an India perspective, beyond a point, I'm not sure how good Trump is for us. He wants sweeping immigrant deportation program put in, and he wants to deepen corporate tax cuts, which is why global markets will most likely cheer a Trump victory. Harris, on the other side, wants a hike in corporate tax rates. She wants a federal ban on price gouging in the grocery sector. This will go down as deeply unpopular, because if you're going to start controlling the way companies fix their prices, it's going to be seen as a bit dangerous. She's also promised subsidies and tax credits for housing, childcare, and even more. So on balance, not sure who's going to be good or who's not, but both are promising to spend a lot of money the moment they come into office. Just a look at fund flows, though, because for us the FII outflows is the big question. And yes, they did sell on Diwali as well. We were wondering whether that's going to happen. 5,813 crores was the sale on Diwali, so it was a truncated, barely an hour-long session, but they did come out. And they dumped on, it's actually October 30th.
This is October 31st.
Yeah.
Fortunately, they didn't come on Friday.
So at 3,515 crores coming in from DIIs. But yes, that's completely unabated. Implied open very quickly. And look at how we're set up for the morning today on India, 70 points down. So it's going to be tough. It's going to be tough, I think, before the Trump versus Harris air clears. But, the point about polls, is it a tight race? Is it not a tight race? Has also become a question. This is such a divisive election in that country, but that's kind of spread the world over.
Yeah, I think it's just gotten too narrow in the recent few days, simply because, and also gold prices and silver prices show that, right? Because I think the last few days they've come off quite a bit, because if the market was presuming that it will be a Trump victory, I think those odds have narrowed down completely. But our markets have been interesting in the month of October. We'll get to Arvind Sanger in a moment. But Samina, October, not the best of months, unfortunately.
No, and I think while the markets and Harris and Trump command the market attention, I think it's going to be the Fed chief who may steal the spotlight, at least for markets for now. Remember, either winners or either presidents structurally don't change the fundamentals of the market. What you might see is interim sort of reactions, which we saw back home as well, right? On day of election, you had big moves, but markets resume the stronger belief of the longer structural setup. But Jerome Powell becomes the man we all need to watch and track. A rate cut this time around is a given. But I think if Trump does come in and they talk about all these tariffs, that the road, of course, for the next rate cut sort of comes down to question. But I think...
just before, Arvind Sanger is 30 seconds out. So just thought, since Samina brought up the Fed, Gavekel Research had this very interesting... their version of what the Fed moves can be in the scenario of either of the presidential election outcomes. So Gavekel says that if Kamala Harris is elected, Fed could choose to sit on its hands. The Fed may choose not to move, because Democrats won't bash the Fed for exercising the autonomy, because Democrats have said all along that Trump presidency would threaten the central bank's independence. So
is autonomy in quotes in this report?
No, I mean, they're saying that the Fed may well choose to not do anything or just do a token cut, and say further cuts will be data dependent, and the scenario will be bullish, according to them, for US dollar and presumably for treasuries and US growth stocks as well. But the fun and games happen if Donald Trump is elected, and they go on to say that Fed will deliver the expected November cut followed by a December cut, because failing to cut will have an impact on the perception of Fed's autonomy, which the Fed fights very vociferously to say that, hey, we are independent. And the other interesting piece that happens is, does Jay Powell come out and immediately go out and say that, hey,
I think,
I'm moving
Niraj,
on?
while all that is political, the fact remains that 2 weeks ago we did see what happened to the 10-year. Very clearly, the economy seems to be on a path of recovery. And I think some economists even argue that we may already be close to the level of interest rates that neither slows the economy or neither stimulates the economy, which is almost a sweet spot. But we've got with us Arvind Sanger, Managing Partner of Geosphere Capital, joining in. Hi, Arvind. Thanks for joining us this morning, this evening for you. To start with, Harris and Trump, we believe, command market attention. But it seems like the Fed chief may just steal the spotlight. Would you agree?
No, look, there's a Fed meeting coming up later this week, but I'm not sure that there's a big surprise coming from the Fed meeting. The expectation is a 25 basis point cut. So I assume the Fed is not going to spring a surprise. I think the bigger issue is the election, because the two, paths are significant differences. One is tariff heavy and regulation light, and the other is regulation heavy and tariff light. So, you have to pick your poison, so to speak. So there are two different paths, and I think that's the challenge that the market faces, is trying to figure out in a very close election which way it's going to go. So I think the Fed is actually a backseat to the election this week.
Arvind, hi. Good morning. Tamanna here. And an interesting report that Niraj just cited before we got you onto the show. And I wanted to get your take on it, because this is such a polarized election. Not even the Federal Reserve has been spared. I mean, the thought that the Federal Reserve will choose perhaps not to cut rates depending on who the next president is, does that seem feasible at all to you?
Not this week. I think for December, maybe. This week, I think, is cast more or less in stone. It may not even be clear by Wednesday clear-cut who the president will be, but I think the picture will be obviously clear by December. And I think by then, maybe some of the early formulas of what the policy may look like under the new president may become clear. And that could cause maybe the Fed to pause if it feels that, let's say President Trump, if he's elected, is going to be much more inflationary in terms of, tax cuts and tariffs. Then maybe at that point, I think it'll be way too early for the Fed to push one way or the other on this election. So I think this meeting, maybe not, but certainly December could become interesting if that were the case.
Arvind, good evening. Niraj here. The other big variable that has happened is oil, right? There is an output hike delay. There are various measures around stockpile, but the point being, it refuses to budge. I mean, the worst news flow all goes to 80 and then succumbs to some bit of selling pressure. How do you view that? It's a much smaller piece in the larger scheme of things, but considering the Chinese NPC will keep commodities in focus, what's your view there on the NPC and on oil?
Well, look, oil, the issue is that between Brazil, Canada, US, Guyana, a lot of non-OPEC countries, production next year is going to grow well north of where the demand is going to grow. So as a result, I don't think the near-term outlook for oil prices, notwithstanding any tension in the Middle East, unless there is major disruption from the Middle East, I think oil is going to remain in a range-bound fashion with downward pressure. As long as that supply-demand balance stays as it is, that's not going to change. So oil, I don't think so. Other commodities, it's a little more interesting. China could play a bigger role in the other commodities in terms of what happens.
Just one last point on how you would view India this week and how much hangs in the balance in terms of the global view, Arvind, when we look at what China will do. Will China's stimulus be a dampener to flows coming into India? So that's a rocky kind of an outlook?
Yeah, well, look, the Chinese have clearly pushed back their decision from the fiscal side. They're waiting for the US election. And so there's an expectation amongst many China observers that there could be a big bazooka that they may pull out after the election. Depending on if it's Trump, then they will need to do more. So if there is more of a sign that the Chinese are actually putting more heft behind their, so far, what has been a modest bazooka, but if they do more, then clearly that is going to provide more, attraction towards the Chinese market. They're clearly trying to support the equity market. They've been less successful in the real estate, but if they were to do other things, that could impact India. And let's not forget that the Indian earnings season has not been as promising or as exciting or as good as people would have hoped. So I think it's not just the China relative, but it's also the India relative is not quite as strong momentum short term. So in the short term, yes, that is a potential headwind for the Indian market if the Chinese do much more post the election.
Thank you very much. We'll hopefully catch you soon. All eyes remain, of course, on your markets, the mother market, which will direct everything else that happens in the world, at least for this week. Well, let's quickly wrap up for you how painful October was. And of course, as we go into November, hopes are high that things do turn around for us. Remember, we started October on a bit of a sour note. Things did start falling apart after we had posted record high on the index. The Nifty 50, and I'm going to put this out there just to sort of ease the blow in some way. The Nifty 50 is up 21%, or was up 21% year to date to September 27th, making it the second best performing equity market globally. But what was to come after that made India one of the worst performing equity markets in the month of October. The Nifty itself fell 6.2% in October, down 8% from its record highs. The correction began on the 27th of September. Well, just to wrap up what happened for us and how those numbers played out, 5 out of the 22 trading sessions were the only ones that saw the Nifty end in positive territory in October. 34 stocks on the Nifty 50 dropped between 10% and 38% from their recent one-year high, which was made literally a few weeks ago. The Nifty mid-cap and small-cap index fell 6.7%. The small-cap index far more resilient than the Nifty itself, down only about 3% in the month of October. FMCG, who would have thought had the reputation of being a defensive pack, actually had it the worst, down substantially, 10% cut on the FMCG index in the month of October, followed by real estate, which was down 9.3%. Bank Nifty was a standout trade, relatively better than the rest of the market, managed to close the month flat despite a mixed bag of earnings coming in from the universe. Well, what led to the sell-off? Of course, there were concerns globally, rising bond yields, disappointing earnings in India, complaints about Indian valuations, China, of course, coming back in action, and of course, foreigners were the first to abandon ship and head back to the US and Chinese shores. Well, you had revenues that saw a slowdown or are expected to not look great. Second quarter revenue growth is estimated to be in the range of 5 to 7%, which is the slowest in 16 quarters. This is what CRISIL believes. FPI outflows came in at a record level at 90. Net outflows stood at 94,000 crores, with a single day high of 15,000 crores of foreigners dumping Indian equity markets on the 3rd of October. DIs, of course, tried to match dollar for dollar. They bought into Indian equity markets in the month of October to the tune of 1.07 lakh crores. Sell India, buy China had been the biggest talking point for most of October. Notable stock declines were counters like IndusInd Bank, Bajaj Auto, Maruti, Tata Consumer, all of which declined in the range of 15 to 26%. So it was a tough October. We were the worst performing market globally, but remember, we have been the best performing market globally year to date, at least, despite the fact that we've corrected substantially. Niraj, of course, the possibility that markets could correct further in a market that has posted back-to-back gains for 8 consecutive years and has not seen more than a 10% correction in 18 months doesn't seem too much for the bears to ask for.
Yeah, well, it seems to be the easiest trade to sell the market on every rally. But I would reckon that for the near term, maybe it's just an easy answer that markets will likely be sideways, maybe with a bit of a negative bias, until clarity emerges by the end of the week on multiple factors, including the election, including the Fed meet, and who knows, the China NPC as well. The other interesting piece is that while this earnings season has been a disappointment, aggregate earnings cut thus far for the Nifty FY25 EPS are about 1 to 1.5 rupees. This came in from a couple of brokerage notes which have come out and put out their earnings review thus far. So it's not a great earnings season, but it's not a terrible earnings cut for the Nifty 50 at least. So in some sense, the Nifty valuation doesn't change dramatically from the 20 times 1 year forward that people feared would happen at the end of the quarter. I mean, there's still some time to go, so who knows what happens in the next 15 days to earnings. But until now, it's really not dramatic. 1 to 1.5% is palatable, if you will. And just a word on auto sales, we'll talk about it in detail, but aggregate, I'm saying, on auto sales, October obviously looks good. I think the real picture will come in when you see October plus November, because last year, the base year, had one festival in October and one festival in November. This time around, both festivals in a single month, and therefore October was naturally expected to look good. I think it will be important to look at these numbers from an October plus November perspective to try and understand, because the Motilal Oswal note guys suggested that the channel checks that they did on retail demand did not suggest any major positive swing in consumer demand or sentiment. So October has happened, and we're going to highlight the individual names as we should. Yeah. But maybe, just maybe, look at 2 months combined.
But the problem is consumption is slowing down, and we've seen that across earnings, right? And of course, autos were the worst performing sector in October, along with FMCG. All on concerns that on ground, business is not looking good. So even if you see an uptick on back of festive demand, I don't know how sustainable the sales number is.
That's the point he's making. I just wanted to add that the fact that Maruti, the biggest player, has decided to change the way it looks at its numbers is a game changer whose impact we will only now see in the next few months. They've said we're not looking at our factory gate numbers.
I think if I had to predict what happens, and I'm not predicting, but to expect what happens in a week from now, the noise about a rate cut will only get louder back home as well. You'll have the Fed cut rates. You'll talk about how Diwali is over and auto and consumption is struggling again. And of course, then we'll all hope for a rate cut, which may just give us the next trigger from now until the next few months.
Just wanted to add one point to what Niraj said on results. Interesting data that our colleague Chinmay pulled out. Of the 34 Nifty companies that have declared so far out of 50, Q2 PAT has grown 2.2%, revenue, this is aggregate of course, up 4.8%. PAT has dropped 3.8% and revenue has dropped 0.7% Q on Q. The first set is year on year. But you have, look at the scorecard, it's actually not that bad. You have 11 beats, 12 misses and 27 in line, which was in Q1. In Q2, 10 beats, 13 in line and 11 misses. So if you compare it, and obviously the glass is not even drunk full to see half full, half empty, but it's maybe not that bad. Maybe there are other factors that have been bearing down.
I think expensive India, relatively cheaper China, higher bond yields. I mean, it's always easy to justify what led to the sell-off after it's done. A post-mortem always a whole lot easier.
Yeah. So let's get
should we get down to stocks? We've got a whole bunch of, actually not that many this morning. We've got a few stocks. It's not a usual Monday morning where we come to you with a whole barrage of counters that you want to talk. I've got 3. They're relatively smaller, but I just thought I'd leave the auto stocks out because we'll do a more detailed analysis on that. Zentech, this one has been a star trade, a star stock for quite some time now. Well, the stock might have seen some pressure recently, keeping in line with what was happening to its sector and the broader markets as a whole. The earnings have been a clear beat once again. Profits are up 365% to come at 63 crores versus 13.6 crores that Zen had posted in the same quarter last year. Remember, they had enormous amount of IP that they had been working on, and that, of course, now has began to contribute to their top line and, of course, enhanced the business productivity as well. Revenues are up 264% at 241 crores versus 66 crores. EBITDA has surged 322% to come at 80 crores, and margins have also expanded. So it's a clear beat on every parameter in terms of earnings, coming in at 457 crores to 33.07% versus 28.5. So I think Ashok Atluri is going to be a very happy man. We will be talking to him later today. But remember, I think we've talked about Zentech for quite some time now, of how it's been a small company, but the kind of work that it's doing, the kind of business, that model that it has adopted is the game changer. And the fact that they do IP in an industry that is so broad, but what they do is literally phenomenal. I think they do a lot of training, a lot of drones, which I guess is showing up in its earnings this quarter. So solid numbers. Zentech could be one stock you want to track in early trade. Big moves could be expected. It's not in the F&O pack, so it's a cash stock, but keep an eye out on this one.
Yeah, but just quick 10 seconds. I wonder if they revise the guidance upwards at the end of this, because they had guided to 900 crores. They've done 500 crores of revenue already, and the fourth quarter would be very high. And he's mentioned this, that the fourth quarter typically tends to be very good for them. And on the bottom line, 130 crores done in FY24. He's done 142
already
in the first half itself. So it would be interesting to see if they up their guidance.
Very likely, right? Because I think when we spoke to him last, he talked about how they were working on the IP which they would bring to the market.
Yeah. Remember, he also said, I like to under-promise and
over-deliver. Okay,
so they've done it thus far.
But strong.
Why should they change it then? But yeah, I mean, definitely a great set of numbers, no doubt.
And Zentech will be one to track. Another one, smaller company, but again, very solid numbers, is Bondada Engineering. I hope I pronounced this one correctly. Profits are up 142% at 36 crores versus 14.9. Revenues have also grown significantly, 62% at 480 crores versus 295. Another one, Premier Energies. I like to track these ones because these are new listings and new entrants into the markets. Big orders from 2 large independent power producers and others. They bagged orders worth 513 crores. The stock was up 6% on Moderate Trading Day. So today was going to be another exciting morning for Premier Energies, guys.
Just a few more. Auto stocks are going to be in focus overall, of course, and we'll get Puneet in to give you a more comprehensive view because numbers have been coming in bits and pieces over the last few days. Just a couple that I wanted to highlight. The first one was Ola Electric. And Ola Electric, because the turnaround in its market share month on month has been pretty good. And let's take into consideration the concentration of festivals in this month, also a focus on discounts, etc., which have bumped it up. Nevertheless, 68% month-on-month increase in retail sales. They've reached 41,605 units. This despite a lot of headwinds on complaints about their services, after-sales service, etc. So that could be seen as a thumbs up. The electric two-wheeler sales rose by 54% month-on-month to 1.39 lakh units, and their market share has come back to 30% from 27% a month ago. So now in the electric two-wheeler hierarchy, Ola is back on top. TVS has actually moved to number 2, and Bajaj Auto, which was number 2, just in electric two-wheelers, has now moved to number 3. Hero Moto is the other one. Numbers looked good. Total sales up 18% at 679,000 odd. Scooter sales, though, were down 5% at 43,000 odd units. So that was a thumbs up. SML Isuzu, very small, but since the numbers came, quick mention, October sales fell 8.2%, passenger sales also 11.9%. They do very small numbers, 300 and 400 vehicles as in volumes, but nevertheless, those numbers were also not good. Azad Engineering, very quickly, 5-year pact with Mitsubishi Heavy Industries for power turbine engines for 700 crores. This will be a bit of a thumbs up, and you could see movement in the stock. 2 pharma stocks in focus. One is Dr. Reddy's. Thumbs down because they've been asked to recall over 3.3 lakh bottles of generic medication in the US. Our pharma analyst Varsha tells me that the category of the medication is not too bad for Dr. Reddy's in terms of it's a grade 2 violation. So it's not going to be too much of a negative, but overall, sentimentally, this could be seen as a bit of a hit because they have seen deviations from current good manufacturing practices. So that could be a bit of a hit.
Yeah, the other one is Sun Pharma, and interesting there because the US District Court has granted preliminary injunction of delaying the launch of the Lexelvi drug. Now, effectively, as a result of this injunction, a company can't launch Lexelvi until a subsequent favorable court ruling or until the expiry of the patent in the lawsuit. And both of these, I would presume, are some time away than what Sun would have ideally wanted. And this would mean that the specialty segment of Sun, which is perceived to be the big driver for Sun, because remember, Revlimid only has a limited timeline for all Indian companies. So this specialty segment for Sun takes a bit of a hit. I reckon this could have a bit of a negative impact on Sun Pharma today. Just very quickly, I'll watch out for oil marketing companies. Notwithstanding what crude has done, a small marginal rise, but there is a 19 kg LPG commercial cylinders have seen a price hike day before yesterday, and therefore this might have a bit of a positive impact on some of the OMCs. Not that they're very expensive stocks, so do watch out for these, could be interesting today. And just one last stock on my radar, GMDC might be interesting. The government is apparently going to tweak the bauxite pricing mechanism, which might actually turn out to be very positive for GMDC. One of the newspapers are carrying that note. Let's see if GMDC has a positive reaction today. I'm
just going to quickly add 2 other stocks on order wins. They usually move on big order wins. So Ashok Bilcon, they won orders worth 312 crores from MSECTL. So for whatever it's worth, it's a big order coming in. The stock will be in focus. The stock was up 3% on moderate trading day. And NBCC is the other one. They've again won multiple orders, and the counter will be one to track in early morning trade. The worth of orders that they've bagged is 235 crores. So Premier Energies, Azad Engineering, Ashok Bilcon, and NBCC on order wins this morning.
All order win. And yeah, you could see some action there for sure. But a lot of action in the auto space. And even in that truncated session, auto stocks were doing fairly well. October sales data is now largely out. I think just 1 or 2 players left to announce. And Puneet has put it all together. Puneet, it's looking like a pretty picture, but is it sustainable?
Well, you know, it's definitely a pretty picture, and there are 2 segments which have really outperformed in this particular month. That's two-wheelers as well as tractor makers. Let me start with two-wheelers first. Eicher Motors is the first one, the Royal Enfield maker. 31% growth in this particular month compared to the same time last year, and that's one of the highest ever growths in one particular month. Highest ever sales, about 1.1 lakh units reported by the company. This is the first ever month in this fiscal year of FY25 which is double-digit growth. So expectation was of a 22% growth. It's coming at 31, really positive. The other stock is Hero MotoCorp. 6.7 lakh units. I think Tamanna, you mentioned it. Highest ever sales again in one particular month in its history for Hero MotoCorp. Growth was expected to be around 13 to 14%, much higher than that as well. The other one's TVS Motors, while growth is coming at roughly 12.5% and it pales compared to the other players, it's continuing its steady momentum in this particular fiscal year, and that's one of the key positives as well. It's also gained market share in the electric two-wheeler space, as you rightly said, number 2 player now for the first time in this fiscal year itself. So it's definitely a big jump for TVS. Within the passenger vehicle space, very quickly, flat month for Tata Motors. Again, another key issue that they're dealing with. Growth is not there for this for the company in this fiscal year. Maruti Suzuki 3.6% growth. Crossing 2 lakhs in this particular in a month in this particular fiscal year might react, but still lower than what Mahindra has done. 25% growth. Another month with 20% growth. This is the third consecutive month with 20% growth in the last 3 months of FY25. Another key positive, and that momentum for Mahindra is continuing in the tractor sales as well. Highest ever tractor sales for Mahindra. Growth is about 29% versus estimates of about 15% growth. So another strong month for Mahindra in the tractor space, and Escorts is another one. 19% growth reported by the company in this particular month. It's the highest ever in this particular fiscal year, and the first time they're crossing double-digit growth as well. So overall, I think a big positive for tractor makers, two-wheeler makers, and commercial vehicle makers. We are still anticipating numbers from Ashok Leyland, and Bajaj Auto is also still left with numbers. For both these players, for Bajaj, it's expected to be a 7% growth. For Ashok Leyland, it's expected to be a 3 to 4% fall. But overall, really strong numbers in this particular thing. A special mention of Ola, they've gained market share now 30%. But overall, I think both these segments of tractors as well as two-wheeler makers might be in trade today.
All right, thank you for that, Puneet. So auto definitely in focus this morning. So is the primary market. Actually, a lot of action in the primary market. It's a busy week, and Samina has all of those details. Samina, one listing, one big issue, all of it and more.
Yes, it promises to be very exciting, Tamanna. In fact, just to quantify that, somewhere 2080 saw 85 companies come into the markets to raise capital to the tune of 1.21 lakh crores via IPOs. This is only on the main board. Somewhere 2081 first week is going to see 15% of the amount that was raised last year, which is about 18,534 crores, that is going to be raised through the primary markets of over 4 subscriptions. So it promises to be action-packed, probably more action-packed than the secondary markets, at least for the next few days. Let's quickly take you through what we have, and I'll start with Sagility IPO that opens today. This is a medium-sized IPO. The size is about 2,107 crores. Price band is in the range of 28 to 30. The IPO structure is about 70 crore shares will be through an OFS, and of course these are going to be sold by the promoter and a couple of affiliated VC and private equity investors of the company. Pre-IPO, they've already successfully raised 366 crores by selling 2.61% stake to 9 institutional investors through their anchor investing book. So this one is an important one. Watch out for Sagility. It is smaller, but nevertheless important as it opens up for subscription tomorrow. Well, the other one is Acme Solar Holdings. Again, mid-size IPO, 2,900 crores is the size of the IPO. The price band is 275 to 289. This also opens up tomorrow, which is 6th of November to the 8th of November. 2,395 crores is a fresh issue, out of which 505 crores is an OFS. So watch out for this one. Acme Solar Holdings becomes the second IPO that you want to track, which opens for subscription this week. Niva Bupa Health Insurance, we've only just got the price band details, so I'll quickly highlight this for you as well. 2,200 crores is the size of this IPO. The dates are 7th November, so this comes in on Wednesday and closes on the 11th. It's a fresh issue of 800 crores. 1,400 crores is an OFS. The price band, if I can quickly get that up, is in the range of 70 to 74 rupees. So that's what we have on Niva Bupa as well. There's 70 to 74 rupees is what we have. So 3 big ones to the tune of 2,500 crores at an average is what the size of these IPOs are that open for subscription this week. Most of them are a mix of an OFS and a fresh issue. But of course, it's the big daddy that we all want to be tracking, and we've been talking about this now for a few weeks. It was in the news for all the right reasons and continues to do so. And this is the big fat Swiggy IPO, the second largest in our times. Swiggy will be opening for subscription this week. 11,327 crores is what they're looking to raise. 6,828 crores is an offer for sale, and the rest of it becomes a fresh issue. This opens on the 6th of November, which is a Wednesday, and will close on the 8th of November. The price band is in the range of 371 to 390 rupees in terms of what we have. Well, why so much excitement around this one? It's because you remember you already had the listed player Zomato, and the debates are all over social media between whether you're a Swiggy camp or a Zomato camp. The good news is that this one has come in at a discount, at a huge discount to what the last trade pre-IPO was done on Swiggy. Let's take you through who the big celebrity investors are, and while this may sound, it's just a little bit of fun that we want to add to the Swiggy IPO, but from Ramdev Agarwal to Amitabh Bachchan to Rahul Dravid, Madhuri Dixit and Karan Johar have all allocated and invested in Swiggy just ahead of Swiggy coming to the markets to list. Well, what are these details now? So of course it's exciting. It's been in the news because you've got a whole bunch of celebrities trying to make a quick buck on this listing and of course believing in the structural story of the company. The valuation of Swiggy is at a huge discount to Zomato, and that's what makes it very, very tempting for investors. What are they going to do with all this money that they're raising? So very quickly to highlight that for you, they will be investing in subsidiaries Kutsi. So about 1,343 crores will be spent on building up and improving the operations of Skutsi. Technology and cloud infrastructure will have about 703 crores. Brand marketing and promotion, that's a big ticket item that they're going to look to spend on. 1,115 crores is going to go into that. They are going to reduce debt by a very small amount of 137 crores, and the rest of it is general corporate purposes. Now remember, the anchor book created a lot of noise a few days ago. We don't actually have the names of the anchor investors just yet. That should hit the market on the filings very shortly, but we'll bring that to you as well. But from reports, we believe $15 billion of subscription was available on the anchor book. In fact, in terms of oversubscription, they of course were only offering about $600 million. So for $600 million, $15 billion had actually applied for Swiggy's IPO. Well, that's of course what we have in the subscription world. A quick check on the listing, and this one doesn't promise to be an exciting one. It's slightly disappointing, even though the company, the legacy is extremely solid. Afcons, the issue size is 5,430 crores. Price band is 440 to 463. It was well subscribed, 2.7 times across the board, but there is a grey market discount on this one. So while what we've seen up until recently is that most listings have shown a premium and have come in at a premium, this one is at a grey market discount at 459 rupees. 4 rupees lower from it, the higher price band. Well, quick take on what they are. Remember, Afcons Infrastructure is a flagship EPC company of the Shapunji Palanji Group. They've completed 79 projects in 17 countries, valued at 56,000 crores. It's not just a local player, but a very significant global player as well. They have a very, very healthy order book. The timelines look good. The order book is fairly diversified as well. Valuations stand at about 36 times. So all in all, this was a good subscription, but unfortunately, maybe it got caught in the midst of a Swiggy listing and a weak sort of equity market sentiment. But nevertheless, all eyes, Tamanna and Niraj, will remain on Afcons this morning.
Absolutely. I'm just looking at that celebrity list on
it's all you found interesting, huh, Tamanna?
No, a lot of it is.
Just like I did.
I'm just wondering if they are going to be laughing their way after the listing or not, because it's become a tough time when it comes to IPOs. But of course, time to shift focus to the derivative market, and that's the big factor this week as well, isn't it, Samina?
Yes, it goes and promises to be a very event-heavy November. And remember, the markets have been in a little bit of a disappointing move all through October. At the start of November, what we are getting is the November futures are trading at a marginal premium, up about 80 points. There's an increase in open OI as well. So that at least while implied Nifty does indicate to a flat to slightly lower start, on the FNO side, it doesn't look as dismal, at least in early minutes of trade, early minutes of data that we have. Bank Nifty has been, I'm going to call it a relative outperformer and hence a star in so many ways, because while the Nifty struggled in the broader markets had it quite rough. Bank Nifty held out. Bank Nifty F&O data also indicating that it trades in a premium and there's an increase in OI. Well, that's pretty much where the action is. You have levels that have changed significantly from the last time I did the F&O wall for you. So in the last few weeks, the situation or the picture looks so different. At 24,300 is maximum call OI where you've seen. So that's one level you want to track. On the downside, 24,000 becomes important. That's where all the put action remains. So the trading range for the Nifty is 24,000 and 24,300 on the upside. But how do you trade a market that's been a tough one? It's been buy China, sell India. It's been sell India on every rally, sell the Nifty on any sort of recovery. And that's pretty much what the trend has been for the last few days. Well, we have with us Milan Vaishnav of Gemstone Equity now joining in. Milan, hi, good morning. We are going into the November series. Rather in a very conservative mood, if I may say so. There are lots of events, so the markets will remain volatile. But good news is that the Nifty and Bank Nifty F&O picture isn't looking too bad. There is a little bit of a premium on the Bank Nifty, and there's an increase in OI as well. How would you trade both of these? Would you consider going long on the Nifty this morning?
Hi, good morning. And as you very rightly said, we are starting off a new week slightly on a conservative note. And if I look at the market solely from a technical perspective, let's not say that we are being sold into and China is being bought into, or let us not assign any external reason to it. If you just look at it from a technical perspective, then over the past couple of days, what we have done is that we have dragged our resistances lower. On the weekly charts, Nifty has violated the 20-week moving average, which is placed somewhere around 24,700 odd levels. And on the daily charts, it has significantly violated the 100 DMA as well. So that zone of 150 points has now become a serious resistance area for the Nifty. So as and when a technical rebound occurs, if at all it occurs, and as and when it occurs, as I just said, we will find a Nifty resisting to the 24,600 to 750 zones. So this is the kind of overhead resistance that has been dragged down. Now on the lower side, we are slightly on a weaker footing, so to say, but around 23,850 to 900, that's where one of the, not very strong, but yes, we can say that one of the important pattern supports do exist. So what I feel is that by and large, we will continue to remain in a downtrend, but we will also see some technical rebounds. But by and large, I expect that for immediate next 4 to 5 days, 23,800 may stay protected, may stay defended, and on the upper side, markets will face resistance at any point higher than 24,500.
Milan, you have an interesting strategy. You've got a Nifty short strangle that you're recommending to our option traders. And from what I understand, this is a strategy which largely is a neutral, where you believe the Nifty may not do big swings on either sides, but of course could take advantage of the time decay in a stable market in some ways. Is that correct? You want to take our viewers to what levels should those options be executed at?
Yes, I mean, we can look at it with two different perspectives. That yes, I am expecting Nifty not to go beyond 24,700 on the upside and not end up violating 23,800 on the lower side, specifically speaking of 7th November expiry. So I expect this range to stay in force, and at the same time, I'm discounting the trends and the counter trends that might exist within this trend. So by and large, I expect this range to stay intact until 7th November. And because of that, I'll be going for a short strangle. I'll be selling 24,700 call and 23,800 put, both of 7th November expiry. The total premium that I'm expecting is around 101 rupees, and that can result into a potential yield of around 3.70% over the next 4 to 5 days. Now, as a part of risk management, we will have to exit this call if either of the edges are violated. For example, if Nifty goes above 24,700, we'll need to exit. If it slips below 23,800, we will need to exit.
Okay, that's the strategy on the Nifty. You do have a constructive, relatively constructive call on Reliance Industries and hence a Reliance call spread for our viewers?
Yes, that's right. Actually, this is a highly stock-specific view on this. I'm seeing a strong development of of a bullish divergence of the RSI against the price, and these kind of technical developments generally are very important when it comes to formation of a base or putting a base in place is concerned. So with that in mind, I'm taking a bull call spread on Reliance. I'll be buying a November 1340 call and selling November 1400 call. Maximum profit we expect is 17,900. Maximum loss would be to the extent of the net premium that we pay. That would be around 24 rupees. That is 12,100 rupees. That's the maximum loss in any given scenario. However, we will book profits if we see Reliance moving past 1400 levels anytime in this month. And as a measure of risk management, even to keep the maximum loss figure down, we can put a protective stop of 1310 on this entire trade.
Thank you for that, Milan. So it's a short strangle on the Nifty where Milan expects a range-bound trade for 7th November expiry and a call spread on Reliance Industries. So very stock-specific, like he said, but he believes that Reliance Industries could be witnessing a relatively better performance now. With that, I'm going to toss it back to Tamanna and Niraj, gearing up for pre-open trade and, of course, our guest.
Yeah, and the watch list. Let's start with what's on NDTV Profits watch list this morning. Zentech, first profits have grown well. Actually, very good numbers. Margins have risen. So we put that in the green category. Strong October sales numbers from Ola, Hero and Eicher. Premier Energies has secured an order totaling 560 crores. That could be seen as a thumbs up. Azad Engineering has a 700 crore order from Mitsubishi for a 5-year pact.
Gensol is in news this time around for the right reasons, an order win. Let's see if it has an impact on the stock. Like we said, very strong auto sales for Ola, Hero and Eicher, so that's fine. Bondada Engineering, profits have jumped up, margins have seen an uptick, very likely could do well. Jefferies is constructive on Nykaa after their 3-day festival, if you will. So that's one brokerage note. The other one is on Cipla, wherein Nomura has upgraded the stock to a buy. Investec has mentioned that it's a fast buy for them as well. Certainly brings Cipla in focus today on open. And we'll, of course, watch out for Sun Pharma when the US court has delayed the put in an injunction, and as a result of which that has delayed the Lexilvi drug launch. So may react negatively.
All right, let's start off with our calls for this morning. Soni Patnaik of JM Financial Services with us, as is Kush Bora of kushbora.com and Chakri Lokpriya of Red Strawberry LLP. Welcome to all of you. Very good morning, and let's hope for a better November than we have for an October. Soni, let me start with you on the index calls. Let's begin right there.
Hey, good morning, everyone. Thank you for having me on your show. So if you look at Nifty and Bank Nifty, they are looking decent. They've started off with, almost good rollovers. They've matched with their high 3 months averages. Now, if we talk about Nifty individually, 24,000 holds to be a very key, crucial support for an entire November series. If that is defended, there could be a bout of short covering, which can lead Nifty towards 24,500, 24,700 and 25,000 levels. So it's very important for Nifty to hold on to 24,000 as a support base. And if there has to be any buy call initiated for Nifty, it has to be on small dips around 24,200, 24,100 range, but has to be a very strict stop loss of 24,000. So the short covering is expected. It may happen, in a week's time or so. I think that's the call for Nifty when it comes to the first few days of for the November series. If you look at Bank Nifty, I think Bank Nifty has also shown strong rollovers. It has matched its 3 months average, and the majority is on the longer side. About of short covering can be seen in Bank Nifty as well. So Bank Nifty on any dip towards 51,000 can be a good entry point to hold for longs. There's good support around 50,500. If that is defended, there's a possibility of Bank Nifty to see the levels of 52,000, 52,200. That's the first area of resistance for Bank Nifty. Only if this area of resistance is breached, Bank Nifty can head higher towards 53,000, which is again going to be another crucial level for Bank Nifty for the whole of November series. So if you look at Bank Nifty individually, there are multiple levels of resistances, and a decisive move above 53,000 for the for November series, it can see higher levels of 54,000, 54,500, because the maximum call writers for monthly expiry in Bank Nifty are placed at 54,000 and 55,000 call options. So I think that's going to be very crucial to watch. Any break below 50,500 is going to bring a caution, for Bank Nifty, and one can exit the long trade. So as of now, for Nifty, Bank Nifty, one can hold the longs. For Nifty, 24,000 remains a stop loss. For Bank Nifty, 50,500 remains the stop loss.
Kush, index calls, are you feeling a little more optimistic this morning?
Between Friday evening and today?
Yes.
Surprisingly, yes. Not a whole lot. Let me also then bring in that disclaimer. Look, as long as 24,000 is held, in an event-heavy week like we are up for, then perhaps there could be some positive bias, that could come in. For all the all the fall that we've seen in October, for the most part of the last week, 24,000 was held. Even the put base around the 24,200, 24,300 mark is giving some sort of an comfort. So, as I said, in an event-heavy week, if the key support level is held, then you could perhaps see a near-term, upside. Does it confirm that the selling pressure is over? Too soon to call it that. But if 24,000 is held, then yes, you could go out and create a long position on the Nifty. I'm more constructive on the Bank Nifty, as I have been for perhaps a month, a little over than that as well. Now, here too, what is interesting is that we are seeing a positive divergence on the daily charts. For the last couple of sessions, it's been stuck between that 50-day and the 20-day, moving average band. But if it does sort of break out, right, of let's say 52,000, then there'll be momentum towards 53,000 as well. So if you want to go long, then Bank Nifty is the index that you want to create long positions on. On the downside, key supports at 51,000 and 50,300, depending on your time horizon. Those are the levels that you can take as as your stop loss on the downside. But fairly constructive on Bank Nifty. If you want to go long, take that as an index. 52,000 is the mark to cross, and then you're looking at a 5300 kind of an up move as well.
So relatively less not constructive. I don't know what I'm trying to say, but you seem a lot more constructive this morning than you felt in October. Of course, promises to be extremely volatile, given that it's an event-heavy week that we also go into. Chakri, good morning. Happy New Year. And how are you feeling this morning? It's the start of summer 2081. It feels like we've left and glad that October's come to an end. But as we go into November, what are the key triggers you're tracking? Do you feel like the situation will settle for our markets?
Yeah, good morning to you all. I think, largely how I feel will depend upon what happens over the next couple of days. A very heavy week, US election result plus US Fed rate. And US Fed rates, by the way, interest rates itself are at a 40-year high. So with their employment under control, unemployment numbers under control, inflation under control, I think the interest rate cut will further boost the US equity markets. So if a Trump win happens, then I think we are poised for a good week ahead in India.
Okay. Chakri, if we are indeed poised for something like that, what would be amongst things that you would like? I mean, would you go out and bet on financials, which have thus far in the earnings season held out well? Or would a China NPC meet outcome propel you to look at maybe metals?
Clearly financials are the safer bet here, simply because, metals, China seems to have lots of oversupply, as well as the economy is not growing fast enough. On the other hand, financials in India have corrected quite a lot. For some of them companies like power financiers like REC, Power Finance had corrected because of fears that they would lend to the telecom industry. Those fears have receded now. Their earnings results were good. On the other hand, Canara Bank, the State Bank of India, their numbers are strong. So, and their valuations are very decent. So, it's easy for these sectors to rebound, and as well as, information technology as a sector, because it's with all the global cloud spend in IT, which is like growing at 30-40% growth. Indian IT will also grow very well.
Yeah, interesting though. Cognizant numbers 31st. They narrowed their guidance, but they have said that they're seeing a lot of positivity in deal flow, and even smaller deals are stabilizing. So Nomura, for example, has gone ahead and hiked the target price for Cognizant based on the commentary of the guidance, but they have narrowed the revenue growth guidance for FY25 for sure, or whatever the year it would be for them. So it's
hedging
difficult to figure out. Yeah, hedging themselves too.
It's the only trade in town is to be hedged.
And after Capgemini and Cognizant now and Accenture earlier, and of course Indian IT, what they've done, difficult to call really.
It's a little bit like banks, right? So mixed, because you have some companies you believe that, I think a few that you spoke to, was it Persistent? That said that
individual companies
the
are doing
outlook
well,
is great. When I spoke to a few, they seemed to be concerned. You spoke to a few large ones too, and it's a big spag, but nevertheless, Chakri is constructive.
I think it's all about what happens by this Thursday, Friday. Think about it. By this Thursday, Friday, if Trump is in the White House, if you have nothing too great coming in from China and Fed has cut 25 basis points, then we will be having a very different kind of mood and conversation versus Monday morning. Chakri, do you think that that's really the big bet? The next 4 days are, in that sense, a wait and watch.
Tamanna, you summed it perfectly well. I think that's pretty much what's going to determine the mood, and by the end of this week. And also, Indian earnings have slowed down, and therefore an Indian rate cut is also becoming quite essential to invigorate private capex, which has still not happened.
Well, it's all about stocks, and I'm going to quickly go to Sony. Sony, we've already talked about the index. What stocks are you buying or selling this morning?
So, Samina, because I've already given, index strategy, so I'll stick with one stock buy for today. That would be Laurus Labs. Now, Laurus Labs, we have seen a good weekly breakout above 490 levels. We've also seen very strong rollovers of 92% on the longer side from October to November series. So Laurus Lab, any move above 510, 515 will give you a very strong move towards 550 plus levels in November series. So this is a positional play. One can accumulate on small declines up to 490, in that range of 490 to 500. One can accumulate in that range, keep a stop loss of 475 and look for higher targets of 550 for November.
All right, we'll take a very short break, but as we get into that break, we spoke to some great market voices on the occasion of the Diwali Muhurat trading. Let's listen into what they say, and a very balanced view on the kind of turbulence we're seeing in the markets right now.
If you are a good stock picker, you have to look at the stock in any sector. And in a growing economy, every sector, there'll be some good performance, some poor performance. Okay, but generally, if you ask me about this, I think I'm bullish about banking, NBFC, FMCG, pharma. I think these sectors, infra, but then I think the choice has to be not on the sector, but the stock in a sector.
I would not be shocked if PSUs made a comeback, and maybe not the old PSUs, but some new, the wide plethora of choices in PSUs. So maybe some other of them will pick up steam out there. But look at the mid-cap space. There's, for the first time, intellectual property being developed by these mid-cap companies. Right. For example, vaccines, antibiotics, anti-obesity drugs, which is very unique, in my opinion, for Indian companies to do. Because generally doing contract manufacturing, reverse engineering, those kind of skills. So these companies are pushing the envelope and doing intellectual property, and they're fairly modest market cap. Right. So I think, again, you take a leap and say, I want to be in this company for 3 to 5 years. I think you could do probably well in there. All the last 4 years, for the first time I've taken some money off the table because I was feeling there was some froth building up in the market. The IPO market had become red hot, which is generally a sign of the market in the secondary market cooling off. But as you also correctly pointed out, I'm very uncomfortable holding their cash. I want to deploy it again. And I'm finding, more challenging valuations. So I'm looking around, waiting my time. Generally, it's been a bad idea. I mean, there's a saying, of course, that cash is king. Right. But generally, it's been a bad idea. If you've been in the Indian markets as long as I've been, I came in, if you remember, when the index was 800. Today, it's closer to 80,000. Yeah. So it didn't pay to be in cash. It paid to be invested in equities. Right. And equities give you dividend. And you have to learn as an investor to ride out the volatility. Right. So while I am sitting on a little bit of cash, I'm not necessarily the most comfortable man around, and I'm looking with both eyes, ears, and hands open for new investment ideas.
Back with India market open right here on NDTV Profit. The pre-open rate's about to kick in, 45 seconds left. Remember, it promises to be a flattish start, maybe with a bit of a downward bias. The only point is that until the weak clarity is out of the way, we'll probably not have too many movements in things. But in a week like this, therefore, it becomes important to try and figure out what to do with specific stocks. So, Kush, I'll start off slightly lower today. The pre-open rates will come in, of course, but what are the stocks on your radar today?
So still going with a hedged position in the sense one long, one short. On the long side, you've got a cash stock, Kirloskar Pneumatic. Now, this one's had a 4-month long consolidation period, with a 200-point range. Last week, it's broken out of that range on the back of very strong volumes. I think, on the upside, this momentum could continue up until 1775 and 1850. And your stop loss comes in at 1600, 1625. That's the support zone. So that's where your stop loss comes in. On the short side, you've got Berger Paints. Now, the stock's been reeling under the 200-day moving average pressure for a while now. Every rise has been taken as an opportunity to sell around the 200-day moving average of 545, 550. So this one's a sell. On the downside, you're looking at a target of 522 and 516, and 535 acts as your stop loss.
That's a couple of buy calls coming in, or one sell call and one buy call coming in from Kush. Remember, crude has been fairly volatile, and that could be one reason why Kush has the call that he does on Berger Paints. Well, the Nifty is expected to see a flat to slightly lower start, and we're sub 24,200 now on the Nifty, and that could be worrisome for a few who've been tracking the index closely. The Sensex, on the other hand, is expected to see a flat start, so don't expect too much in the early minutes of trade. Sony, auto will be in focus this morning. Largely on back of pretty fantastic numbers that have been reported. Any trades in the auto pack, also keeping in mind that October was rough for auto stocks. A technical bounce back cannot be ruled out with fundamentals supporting the sector, right?
So absolutely, Samina. So on technical parameters, if you look at the auto stock, which is looking, and lucrative from a short-term perspective, trading idea, then I think one should look at Eicher Motors. So Eicher Motors has been continuing to hold above a 2050 exponential moving average on daily charts, which is above its 4,800 support level. It's very good, strong support. A lot of put writers have built their base around those levels. So on a positional basis, the stock may test 5100 odd levels. Any break above 5100 gives you a fresh breakout on charts, and the stock may head towards 5300. So I think these are the two levels to watch out for, with a support of 4800.
Okay, well, so that's on a specific name, but I think a bucket of stocks which will focus, which will be the oil marketing companies. Now, oil has largely been soft, which probably is a big trigger for them for their October to December quarter income. But there is more news today because there is a hike in commercial LPG cylinder prices. Mika Johnson, you tell us what is the nature of this hike and possible impact of the same. Mika, good morning.
Good morning, Niraj. So OMCs have hiked the 19 kg commercial LPG cylinder prices by 62 rupees, and the 5 kg free trade LPG cylinder prices have been increased by rupees 15. But the 14.2 kg cylinder, which is actually the retail cylinder, the prices for this remains unchanged. Now, when you talk about the city-wise update in key metros, well, Chennai, we have the highest rates at 1,964.5 rupees. This is the current commercial LPG price opposed the hike. Delhi, it stands at 1,802. Mumbai at 1,754.5. Now, when you talk about the potential impact, well, the LPG hikes could offer some relief to the OMCs. Higher prices lead to higher revenue realizations, and it's something that's known that the OMCs have been facing heavy losses on LPG sales this year. Now, this total H1 FY25 OMG LPG losses range from 4,000 to 8,000 crores, depending on which oil marketing company you pick. But while the commercial prices have been hiked, the companies are facing the losses on the retail LPG cylinder part of it, which is currently being sold at a subsidized rate due to the Ministry of Petroleum's mandate. So while we don't know the breakup, there could be some relief from the total sales realization front, but the LPG retail prices that have remained unchanged is a key pain point still. When you talk about if the price hike is enough, well, not really. The support, all the companies have said that they need the support from the government in order to recoup these losses. This was expected. A possible allocation was expected for this phase in budget this year, but we did not see that coming through. The prices of the retail LPG cylinders remain unchanged. Like I said, is a key pain point, and these prices need to be hiked by at least 200 rupees per kg as per Hindustan Petroleum's management in order for the companies to even reach the zero under recovery.
That, Mahima, that explains why some of these OMCs are going to be in focus in today's day of trade. Sony, one more stock that caught your attention, I'll come to Chakri as well, on it is Zentech. Very solid numbers coming in from their stable. I know it's not an F&O stock, but on the charts, how good does Zentech look?
So, Samina, on charts, the stock is above its 10 and 20 exponential moving average support. So I think around 1790, 1800 range lies multiple support, and it's very important that it holds on to the support on the high side. It can test 2000. That's the immediate resistance one can see. If it's breaking above 2000, it becomes a fresh breakout on daily charts, and the stock may head higher towards 2150 odd levels. I think one can accumulate on small dips around 1800, keep a very strong support of support stop loss of 1780 from those levels, and then look for higher targets of 2000 and above that 2150.
Okay, well, this doesn't surprise that Zentech is doing this. It may do 10%, it may do 8%, it may do 6%. Don't quite know what will happen at the end of the pre-open or what it does today. But because he's already, as Samina was highlighting, he's done 500 crores of revenues already. He's surpassed last year's profits in the first half itself quite convincingly. And therefore, it'll be interesting when Ashok Atluri talks to us today at 12:15 p.m. to try and understand from him what's next. But I'll tell you what Goldman Sachs believes is next, because they believe M&M could do well because they have a buy call on the back of the strong SUV order backlog with EV launches. Harsh Johnson with a slice of that report. Harsh, good morning.
Good morning, Niraj. 27% upside is what Goldman Sachs sees on M&M. They believe, of course, the pipeline remains very strong, both on the PV side of things as well as on EVs, which launches should keep the growth number buoyant, especially for M&M going forward. They believe both launches as well as backlog will drive growth, and growth will be better than peers, so it'll outstrip growth on peers. The other piece is they're constructive even on the cash cow business, which is with regard to the farm equipment. They believe that improving underlying market dynamics, including a good monsoon, will aid the numbers for that particular space as well. So it's going to be a twin engine which is going to drive growth. They're expecting a 20% EBIT and 100% free cash flow CAGR over FY25 to FY27. Very, very bold in terms of the numbers itself. And they're expecting 11% beat to the average analyst on Bloomberg as per EPS estimates as well. So a far cry in terms of the way they are estimating numbers versus how some of the other analysts on the street are. Very, very constructive, Goldman, and a 27% upside.
Right, that is a few brokerage calls coming from Harsh. Thank you for that. Constructive on M&M is the view coming in from the brokerage. Well, Chakri, we didn't get a chance to talk to you about Zentek. You want to share views with us on how you feel about the company? It's a little bit of an outlier in the defense pack, and I know while the sector, PSU defense, has been a sell trade for most fundamental analysts too. This one being in the private sector with its very interesting product offering and the fact that the numbers have been a beat quarter on quarter, would you recommend a buy call on Zentek?
Being a private company and it has various levels of qualifications to be able to sell into the defense sector, which in itself is a big moat that the company has built for itself, and that moat affords it a kind of a multiple which you would not give to other companies. And second, in terms of their revenue beat, shows that the order momentum continues to be strong, giving confidence that the company can grow for the next 3-4 years with that, and that's what the multiple requires. So I think, yes, you could potentially nibble into a stock, but mind you, the stock has actually done very, very well.
After the pre-open session, pre-open rates have settled and I would say not half bad, frankly. IT stocks under pressure this morning, and that I suppose will continue for most of the week until the air clears on who is the next US president. But the Nifty and Sensex ending pretty much flat. The bank Nifty in the green. In terms of movers, not too many. Max Health doing okay. It's all about auto, I would say. Look at Hero, look at Maruti Suzuki, look at Bajaj Auto numbers there on your screen. And seems pretty flat, frankly. Total two-wheeler sales are up only 2%. It had a bit of a spike, but then it's paired off compared to a Hero, maybe not that great. Let's pull up what Hero has done pre-market, pre-open as well, as we should see M&M too. I want to see what Ola Electric is doing. Hero Motors about 2% up. Good set of numbers in this month. We should look at TVS very quickly. M&M is down about 1%, so the numbers were pretty robust. Ola Electric about 2% up. They've regained their top spot in terms of market share. TVS Motors also slightly up in the green. Kush, anything interesting that you're spotting after the pre-open session?
I'll stick to the auto pack. M&M for the most part has respected that very strong support zone of 2650, 2700. So as long as that is intact, I think there's a long trade to be had on Mahindra & Mahindra. The momentum indicators are a little sideways, so that could be missing. But from a medium-term perspective, this is shaping up very well. So M&M, let's say with a stop loss of 2650 and for positional targets of 3000 and 3200 is something that can be considered. But mind you, this is a positional view.
That's coming on the auto pack that's been on the sell side all through the month of October. No major relief, at least in pre-open ticks that we have. Sun Pharma is another stock. There's a little bit of a negative news flow that could be impacting the counter in early minutes of trade. If you can quickly pull that up, not too bad. 1% off is what we have on the stock. Apart from that, Bank Nifty once again will be in focus. Metals will be something to track as well. So you've got lots of moving parts across the universe of the markets. HDFC Bank looking slightly better off in early trade this morning. Chakri, I think largely barring maybe one or two banks, most banking earnings are now behind us. What was a standout for you? Which is the banks that you would buy from a one-year perspective that you're constructive on post what you saw in terms of earnings?
If you look at bank earnings across the board, largely, as expected, their NIMs went down. Their provisions kind of improved, which provisions going up is a good thing. NIMs going down brings the overall provisions not good. Look rates and deposit growth rates, there has been a match depending upon the type of the bank. But where has been more consistent is actually in the PSU banks, whether you look at Canara Bank or State Bank, their numbers are stronger. So I think, the value, and they were corrected also. So those are the companies that I would buy into.
Well, that's the view coming in on some of those banking names. Another few stock, just a quick check on the Nifty. We've got a couple of minutes to go as we gear up for pre-open trade. It's expected to be a flat start. Don't expect too much in terms of market move, but it's a far better picture than what implied Nifty was indicating too. The Nifty expected to start at 24,300. Kush, if we hold on to 24,300 for most part of trade this morning, would that give you enough confidence to initiate a long? And if yes, what would be your target on the Nifty if you do so?
So at the current juncture, the risk-reward ratio from a positional standpoint may not be as attractive. And the reason I say that is because 24,000 is the broad support zone. And on the way up, you're looking at a 24,600. So we're bang in the middle of, that range. But let's say from a daily perspective, as you said, if 24,300 is held, then you will see some sort of an up move towards, 24,375, perhaps 24,450, those kind of levels. So from a today daily perspective, that's the number that you're looking at, 24,450, another, let's say 50 or maybe even 100 points of an upside if this is held. However, there is still a mix of red and green. It's not all green on my screen as well, in the pre-open. So I'll be a little cautious. Maybe any dip towards 24,250, 24,225 should be a more attractive level rather than, at a 100-point gap up.
Right, you've got a few of those auto counters that are performing and supporting the Nifty in pre-open trade at least. So Maruti is up 2%. You've got Eicher Motors, it's up 1%. Pharma major Cipla is also looking okay in early minutes of pre-open trade. So all in all, it's not looking too bad, if we can call it that, right? It'll be a steady, stable session. Chakri, just extending our conversation from banks to the earnings season so far. What were your standouts in earnings reporting in the second quarter? What did you like and what would you buy?
If you look at the earnings, basically there were earnings downgrade, and this was because of a revenue slowdown. So, which kind of indicates that, companies, they were growing at best only. On the other hand, you had some of the industrials where actually the earnings revenue growing faster than the inflation, which will be growing faster than the real. On the other hand, IT companies actually held out well. So if you sum it all up, IT as a sector, with its fortunes linked to the US, soft sectors have actually corrected, valuations are fine, so they're looking good. Some of the power companies, because power is not dependent whether on internal or external factors, there's secular spending. So whether it's an NTPC or power financiers or all the power related companies, I think are on a good wicket and good enough to buy.
Okay, I'll stay on, all of you, with just about 15 seconds left for the markets to kickstart trade. Keep in mind that we're looking at a small degree of large cap stocks, which will be individual movers, maybe the likes of Sun Pharma, maybe the couple of OMCs and so BPCL on the Nifty, but a clutch of mid-sized names could be in focus as well, some for the right reasons. But here's how the indices are starting off, as flat can be really, or 0.2%, so nothing too dramatic. Banks are in fact very, very flat. Wonder what the mid-cap and the small-cap indices are doing. Nifty IT down 0.5%. So the Cognizant guidance narrowing, maybe that's impacting. Mid-cap index 1/3%, small caps about 1/3% as well. Nothing too dramatically untoward. Let's get the heat map up on the screen, see if Sun Pharma is sulking in trade. Yes, it is. 4% lower for Sun Pharma on the open because of the US court injunction on the launch of a specialty drug. Bajaj Auto reacts negatively to its numbers, and IT has predominantly Infi, which is starting off lower. Not that all the others. So HCL Tech and Tech Mahindra haven't started off negatively. It's Infosys, which is essentially starting off lower. ONGC, Hindalco, BPCL are amongst the others which are down. It's a large degree of red because the Nifty is now quickly slipped to about nearly 0.5% lower in trade. I reckon heavyweights like Reliance are to be blamed for that. What's doing well? Mahindra and Mahindra, 3.5%. Goldman Sachs note. Cipla on an upgrade from Nomura as well as Investec. Eicher Motors up about 1%, and then Tech Mahindra and HCL Tech. So the news from the center, sorry, this is not a cricket match, and thankfully it is not because India has lost very shabbily. But M&M and Cipla on the upside, Sun Pharma on the downside.
You say news from the center, I hear something else. No, bad morning, and the index sliding quickly. Between the last 20 seconds, you've seen another 0.20% of the Nifty coming in. Let's pull up the sectoral indices this morning, and I suspect IT will be one of the worst hit. Apart from oil and gas, the LPG price changes are not quite helping, 1.5% down. Look at the wider markets and the broader markets crack as well. The Nifty small cap about 1.5% down as well. Only Nifty Auto managing to stay in the green, but just about by the skin of its teeth. The rest looking pretty dismal. Mid cap and small cap stocks also hurting. Individual stocks we could look at. I mean, a lot of them auto numbers and some of them that Niraj spoke about. So Hero, M&M, just want to add Ola, Bajaj Auto, all of them reacting as per the numbers. M&M the only one doing okay. Hero Moto actually had a decent set of numbers, but the stock now down about over 0.5%. Let's look at Ola Electric and let's look at Bajaj Auto as well. Both down in the red. Bajaj Auto over 2% down. Azad Engineering, Premier, NBCC, all of them had order wins. Is that helping? Only for Azad Engineering, nearly 10% up. I think this is an outlier stock in a market today which is quite dismal. So Azad Engineering, with that 5-year pact with Mitsubishi, is the one which is doing okay. Zentech, great results. Is it being rewarded by the street? Just barely so, 1.5% up right now. Zomato was one which struck me. Is there some impact of Swiggy's IPO opening this week? Perhaps sentimentally over 2% down. And Max Estate is the other one. There's an Investec note out which was quite positive on Max Estate. Has that helped or not? I'm not too sure. But overall, Samina, I would say that this is a tough morning. It's a tough morning for the market. Nothing too much to celebrate, even in the broader markets. And I think the broader markets are cracking even more. Even Max Estate not being helped by that Investec note.
Another tough morning. You know, we've been out for quite some time now. October was tough. The start of November, barring moderate trading, is not looking good. Remember, the broader markets had outperformed the benchmark in October, but at the start of November, the mid and the small cap space now is getting beaten down. Small cap index lost only 3% in October as compared to the benchmark, which was down 6.5%. So there was outperformance on mid and small. This morning, the trend is reversing, where mid and small are looking far worse than what the benchmark is looking. On that note, I want to do a quick check on Bank Nifty, because Bank Nifty has been resilient for October. And that for me was a clear standout trade, right? Because despite a mixed bag of earnings, Bank Nifty managed to gain with marginal end the month of October with marginal gains backed by DIA buying. This morning, Bank Nifty doing relatively better, but in negative territory, 0.3% lower is what we have. Remember, Asia this morning isn't doing too badly. Wall Street had a record run on Friday. So despite very strong global cues, the trend in India seems to be sell India, and that largely seems to be what most traders are also doing. Nifty 500 is down 0.9%. Your top gainers, macro tech developers, are 5.5%. Gillette has been a trade last week. Remember, their earnings were quite impressive, on back of which the stock has been gradually gaining this morning, up 5%. Couple of order wins, NBCC, Premier Energies and Ashok Bilcon. If I can quickly get those up on the screen, and if see the markets are rewarding any of those, not at all. NBCC is actually down 2.5%. Premier Energies is down 0.5%. And Ashok Bilcon, while we're at it, let's do a quick check of how that stock is reacting too. More than likely, it's probably seeing a downtick. 2% lower is what we have. CAMS is having a pleasant morning, 2.5% to 3% higher. Asset management companies aren't doing too badly. So companies or financial institutions ex-lending are doing relatively better in early trade as we see it. UTI Asset Management up 2.5%. M&M is up 2%. Tech Mahindra, 361 WAM are some of the positive movers in early ticks across the broader markets. On the sell side, Poly Medicure had it rough on moderate trading day. It was very, very wild, right? So it had a gain of 15%, finally went home with gains of 7-8%. This morning, giving up everything it picked up on Friday, down 8.5% on Poly Medicure. KEC is down 5%, Triveni Turbine is down 4%, Star Health, Sun Pharma, Imami, Credit Access Grameen are trading with a cut of 3 to 4%. Just a quick mention on Pondana Engineering. I don't know whether Tamanna highlighted that, but those earnings were fantastic. Whether the stock is rewarding or investors are rewarding the counter is what I'd like to see. If I can get Pondana Engineering on the screen, that should be helpful. On back of one, and it's trading flat. So nothing really. Sony, you want to quickly come in? Any sort of stock or trade you've identified, maybe on the sell side, if not on the buy side this morning, because it's just looking like a very tough morning again.
Certainly, Samina, quite tough. However, there's still a buy side trade that I have on my radar. It is Federal Bank. Now, on 13th of August, it tested a new high of 206.5 odd levels, and it's still sustaining above 200 as of today, even though the market is quite choppy, and it is heading to test those highs again. So if it breaks that 206.5 resistance, the stock can head towards 210, 214 as a next resistance level. And there's good, strong support of around 200. So I think, the stock may hold on to the 200 support and head higher. So it's even building some fresh longs as of this morning. So I think this is one stock that is in my radar for today.
Okay, that's on Federal Bank. What else? I mean, I was just, so one of the stocks that is likely to draw in some FTSE flows today is Torrent Pharma. I wonder, and now that the big block deal is behind it, I wonder if there is some merit in this one on the long side. Selective pharma names are coming up regularly as long calls. Kush Bora, any thoughts on Torrent Pharma?
Had a very steady run of consolidation, but then it's given way. So now I think on the way up, 3300 will act as a bit of a resistance zone. So I think for now you could ward off that purchase. The likes of Cipla that are doing well today, perhaps something that you want to keep on the radar, but not Torrent Pharma particularly. 3300 was a very strong support zone. So as I said, the supply pressure could come in. So you might just want to be a little watchful before you buy. Let 3300 be taken out convincingly, perhaps a day of close, and then you can consider.
Just one very quick one. I want to come to you, Sony, on this one. Now, we are sub 24,200 on the Nifty. We were talking to an analyst recently from Nuvama, and they indicated that the Diwali week, we may be slightly resilient, but once Diwali is behind us, November may continue to see selling pressure. Do you feel like after outperformance on the mid and the small cap index in October, even though I know the mid cap index is in correction phase, come November or in November and December, the Nifty may potentially go down to levels of 22,000. Does that seem possible? I mean, we're still looking at a 8% correction from here on. Likely or rather unlikely at this stage?
So, Samina, if we are looking at such a deep correction, it cannot be maybe from current levels because, a lot of parameters are very close to getting into an oversold level. The possibility of the indices correcting that much or, testing towards 23,000 as a first level that it can test would only be if there is some short covering where there's enough space for, the FIs or maybe to add the fresh positions. Of course, come November, they have started the entire series with aggressive shorts. So they've not covered those shorts and Nifty has corrected quite a lot. So there could be a bit of a covering first and at a higher resistance, maybe around 24,500 to 24,800. So that level, maybe that range is where a fresh round of shorts, if at all it gets created, then one can say that, maybe November, it continues to remain as volatile. And there could be a possibility of the second half of the series to test the lower levels around 23,500 odd levels. So I think that is how it can be looked at. Current levels, even if it has to fall and break below 24,000, it may find a support around 23,800, 23,700 immediately because 23,700 is where the 200 EMA is still intact for Nifty on a positional basis. And by the time it tests around those levels, it would have entered a lot of oversold parameters. So the covering would be as sharp and strong from those levels as it can go from current levels. So I think it's better not to go aggressive shorts at current level, maybe remain hedged, of course, for the second half of the series. But any fresh round of selling should only be seen in the second half of the series once it has reached the resistances, and then there's a there's a high possibility that it can test the 23,000, but maybe it happens on a positional basis.
Certainly, corrective moves out there, all right, today. And a lot of individual sectors and a lot of strong names too are correcting in trade. Chakri Lokpriya, a lot of people would have bought in the Samvat session. And a lot of people would be in a mood that, okay, now that the Nifty is closer to 24,000, which seemed almost impossible when we were circa 26,000. But we are here now, here and knocking on the door. Is this the level to nibble? Or even the nibbling level is a bit lower, Chakri?
Actually, when uncertain events happen, the markets always tend to overreact. If you look at the current correction, and the Nifty has probably corrected about 5, 6, 7% in the last one odd month, earnings downgrades have been more or less been in line with that. And some of those high-flying stocks in the defense and all are down 40, 50%. So that way, the froth has largely gone out. Companies like sectors like IT, I think those, whatever was the outcome globally in the US, would still be easier to buy.
Right, Chakri, that of course is the trend in the market. And just a quick check of how the broader markets are performing in trade. Nothing seems to be helping the Nifty, at least in terms of trade. 24,100 being 24,100 has broken on the Nifty. We're down quite sharply now, 0.8%. So struggling. We did dip below 24,100 just for a flat second, and we've tried to recover from that, but nothing material, as you may say. 24,096 is what we have on the Nifty 50. The broader markets looking as pain. The small and the mid-cap space are down. Stocks are getting beaten down despite there being no major sort of reason to sell any of those counters. So case in point, Kirloskar is down 5%. Poly Medicure is down 7%. JB Chemicals is down 5%. Star Health is down 5%. Blue Star is down 4%. KEC is down 4%. Sun Pharma, of course, there's a stock-specific news trigger on that one, is seeing a 3% cut. The Nifty 500 itself is trading lower, down about 1%, with Gillette being the only counter that is supporting the broader markets to some extent. But that chart on the screen is worrisome. I don't know, Sony, you want to come in on this one? I mean, this is not what we were anticipating this morning. We've slumped, broken 24,100, which was, I assumed it was quite the level of support, assuming that 24,300 was tested on Friday when we closed markets. What is going on? Who was coming and dumping us this way?
So, Samina, I think the support is still continuing around 24,000, and that would be quite crucial on a closing basis, perhaps. Of course, on intraday basis, if 24,017 spot breaks, then there could be a possibility of that another 50 to 70 points dip, and it can test 24,000 on an immediate basis. It's very important to watch out for these levels. Now, if it pulls back from 24,000, then there's a good support, one can say, and there's a possibility it may again recover towards 24,200, 250 odd levels. However, if that support also breaks, and especially on a closing basis, then it'll certainly bring a lot of alarm, and one would have to continue with a very aggressive hedging positions when it comes to indices. So all eyes on 24,000 for the day, and certainly that's a level where even bulls would be fighting to defend, and that's the level to watch out for, because that's going to be a very serious fight between bulls and bears to make a make or break level for the day.
Tough morning. Kush, what's the trade here? And so, of course, Bank Nifty is feeling pressure quite intensely in the last few minutes. And let me talk about the top loser on the Nifty 500 as well, Poly Medicure, company which you said you should look at buying at lower levels. Are these the lower levels?
So, Tamanna, first of all, in 4 days, or rather 3 days, the stock went from 2,600 all the way up until 3,400. So, had a stellar run. And, in a market like this, the higher they go, the harder they fall. And, that's what we're seeing. So, we did mention that, buy on dips close to 3,000 levels. It's below that. Now, my suggestion would be to hold off that purchase. The only reason being that, the ferocity with which it has come down is a little too much for my comfort. So, you might want to hold, let the consolidation happen, because in 4 sessions, the stock's been very volatile. Maybe a session or two of consolidation, and then perhaps this can be looked into as a buy trade again. So Poly Medicure very much on the buy side, but if you're buying fresh, then perhaps hold off for some consolidation to kick in. Now, just to come to Nifty and Bank Nifty, this move at least from how the morning was shaping up, is a bit of out of the blue. But now, do you go short on the Nifty or even the Bank Nifty? I don't think so. The reason being that 24,000 is a strong support zone. We spoke about that in the morning. That 24,000 was held for the most part of the last week. If that is broken, that's when you will see some more pain coming into. Sure.
Closing below 24,000 or an interim drop sub 24,000 becomes a short trade?
So, technically speaking, closing below 24,000.
So that's what you need to watch
because
for
what
today.
can happen is you could very much get a rebound or short cover trade from just below 24,000 levels. So, closing below 24,000 will be more troubling for the bulls. And even the Bank Nifty, 51,000 was respected for a good part. So that's the level. Both the indices close to support zones. You don't want to go short at these levels at least.
It's recovered 24,100. I mean, even if it's a minute or two, we should be, I guess, marking that. But Soni, Chakri, Kush, thank you for joining us. It's a tough day of trade, and I guess that makes it even tougher for all of you who've got to go back to work and track these markets very closely. Well, let's move on to a management conversation. TTK Prestige has reported numbers. It seems like it's a mixed bag. There has been some pressure on their margins, and their exports have also declined quite sharply. But let's understand the outlook for the second half of the year. Mr. Venkatesh, MD of TTK Prestige, now joins us. Venkatesh, good morning, happy Diwali, happy New Year. Just let's talk about how the quarter has been and what's the outlook going ahead. Despite a 3% increase in revenue, EBITDA decreased by 10%. Margins have dropped from 11.1 to 9% in this quarter. I do understand that there is some pressure on back of higher raw material prices. You want to give me a sense of are there any other reasons why there's been a drop in margins? And going into the second half of the year, how do you plan to mitigate rising raw material costs?
Good morning. Happy Diwali and a happy festive season ahead. We've seen sort of a rebound of top line happening. On the cost side, there have been pressures from the raw material and packing material pricing. There's been sort of a sharp ramp up that's happened in the last quarter. We believe it's consolidating, but the impact of that is to be felt as the year moves ahead. We focus more on mitigating this cost through internal cost reengineering, focused on automation in terms of manufacturing. Some of our plants are getting automated and digitized, and that should hopefully mitigate a little bit of the cost as we move forward. We've also been investing in sort of strategic initiatives, ramping up our R&D costs, and that probably also has a little bit of impact on the costs as you look at. Overall, we do believe that as we move ahead, the market is sort of bouncing back, and that should help us as we consolidate our costs, and that should give us a way forward that's looking much more better.
Venkatesh, margins has been a concern, and hopefully it does settle as we go into the second half. Exports have also declined substantially, 26% year on year. Can you talk to us about what the challenges are in the international market, and also what can we expect going into the next few quarters? Are you expecting exports to rebound? And has the problems been geography specific, or has it been more broad based in terms of the decline that we've seen on exports?
It's been broad-based, and one of the key reasons is for the macroeconomic situation outside the country today. A combination of logistics, a combination of freight availability. Orders are robust. We do see that the orders coming in are robust, but supplying them and fulfilling the orders has been a concern. And that's one of the reasons that you see exports being a little subdued than what it should be. Would it bounce back? I think it's going to take some time, primarily because of the macroeconomic situation. As that improves and availability of freight support increases, we should be able to sort of supply better. But we do believe that overall the robustness of the demand is something that we're starting to see. Quarter two, we've seen a good demand in terms of exports. Fulfilling them is becoming a challenge.
Mr. Venkatesh, hi, Tamanna here. I'm just wondering how you are looking at the pressure coming from e-commerce as a, method of people buying. Is this something that you think gets worse going forward, and what is the outlook that you're seeing? This was, what has festive been like for you, and is the outlook now looking better in terms of consumption?
So if you want to look at from e-commerce perspective, e-commerce is one of the fast growing channels as far as the industry is concerned, and TTK Prestige in particular. The demand has been fueled by the ability to fulfill demand in the tier 2, tier 3 towns. So there's a geographical expansion that's leading the e-commerce growth, which I think is good as we move forward. There have been pressures in terms of pricing, which is sort of being now controlled. And we do believe that a good mix of general trade and e-commerce would be helping us to grow much faster. E-commerce and quick commerce are two channels that are sort of growing fast compared to the general trade. And that, I think, would continue to happen as the channels, as the e-commerce players expand into tier 2, tier 3 towns.
Right.
Okay. What is the kind of outlook that you're seeing now on margins, sir? Are you expecting commodity prices and input prices to go on impacting you? And do you see margins at least improving by the end of the financial year?
There is pressure on pricing in terms of raw material and packing material. That continues to be on the higher side. Mitigation efforts are on, but that pressure, in my view, would continue through the year.
Right. Venkatesh, a couple of things that we want to get an understanding from, right? From what we understand, the trade channel is also experiencing some pressure from e-commerce platforms. And I believe that is another, while revenue has seen an uptick, that could be something that becomes a concern going ahead. Are you adopting your sales distribution, network, implementing e-commerce? Because the smaller players are largely based there, right?
Yeah, as I said, e-commerce is one of the fast-growing channels.
How much has it grown, Venkatesh, and how much will it improve your revenue in the second half of the year? If you can quantify that, that would be useful.
It has been upwards of 20% across the industry. So we do believe that growth continues to happen for the e-commerce channel. However, having said that, I think it's important to balance both the channels because general trade continues to lead the expansion of the industry into geographies. It leads into numerical distribution expansions. So we, as a company, we focus on balancing both general trade and e-commerce in a very smooth manner. Pricing is a very critical element of this game, and that's something that we tend to control along with our e-commerce partners. So one channel would not grow at the cost of the other. While consumption definitely, yes, is moving towards the e-commerce channels, particularly in the towns, we do believe that the general trade will ramp up faster as they move, consolidate, and that should help growth as we continue to invest in both the channels.
Mr. Vijayaraghavan, good morning, Niraj here. The sound bites that are coming in from various consumption companies about what the Indian consumer is doing are perplexing in some fashion, simply because some companies have gone out and said that they've experienced a rural revival, but it's difficult to call that whether it's sustainable or no. Likes of Pidilite have said that they've seen rural doing well for the last 2 quarters, and therefore it doesn't surprise them. You've kind of focused on premiumization. So I would love to understand from you, what is your belief about what the rural consumer is doing versus what the urban consumer is doing? And would it be idiosyncratic to you because you are focusing on premiumization, or would that hold true for the entire sector in which you are present in?
So I think we need to look at it as two bits. Premiumization definitely is happening at one end of the market. However, as I mentioned, there is another end of the market, which is a mass market that continues to keep growing as well. So India is actually witnessing sort of a dichotomous situation where there is a premiumization that's happening at the top end. There's a substantial growth that's happening at the mass market end, driven by, in particular in this category, driven by tier 2, tier 3 adoption very fast. So I tend to believe that the two opportunities are independent of each other and need to be addressed by a very different go-to-market that companies would adopt. This category in particular, and TTK Prestige, focuses on both the ends, and we are therefore adding on to a mass portfolio as well as we move forward. Our mass brand is doing well, and we do believe that both the opportunities are presenting themselves for a scale-up as we move forward. The concern, however, has been in rural, which is beyond the urban towns. If I were to look at beyond the top 2 tier 3 towns, I do see that there is a little bit of a demand weakness that is there today, and that is something that probably is also impacting us in the current quarter numbers. As you look at, we've been serving rural through a different model, and there's been a challenge of demand from deep rural, as I would call it, beyond the towns. That is something that is a challenge that we see in the industry, and we see in particular.
Okay, and would you believe that's holding true only for your industry? Because one of the large FMCG companies apparently said that
there is no middle class now, per se, to cater to in some sense. The middle class has gone absent. I mean, what's your sense there?
So if I were to look at it from the lens of segmentation, I think there's a very sharp segmentation that's happening. Therefore, the earlier scenario of taking a mid path sometimes for brands do not exist today. The segmentation is actually therefore making brands to be very sharply focused on premium, mass premium, and the mass market as well. So a mid path of catering to some part of the top segment, some part of the middle segment, that I think is vanishing as an opportunity today. So I wouldn't say middle class is vanishing. I think the segmentation and the consumption patterns are getting diverse, that each opportunity is actually becoming unique by itself. So companies which have brands, which have a portfolio of brands which cater to multiple segments have a sharper opportunity to grow faster.
Mr. Venkatesh, just wanted to know about, you're sitting on about 850 crores of cash. What are your plans to deploy this? What is the kind of strategic outlook now for the rest of the financial year?
So we've sort of engaged with some external partners to evaluate these opportunities at this point of time. As we move forward, we will have a sharper view and a framework on where do we sort of look at some of these acquisition opportunities. But long term, we do believe that acquisition opportunities are an integral part of a growth strategy as we move forward. You would get to see some of those opportunities pan out maybe a couple of quarters down the line.
No, so just to reiterate and simplify that, there are acquisition opportunities you are actively looking at right now?
No, we are not actively pursuing at this point of time, but we do believe that we would come back with a very strong framework to look at some of these opportunities.
Okay. So it is on the horizon, maybe 2 quarters
it's
down.
On the horizon.
Okay.
Yeah.
Okay.
Right. Thank you very much, sir, for joining us. Good luck. And hopefully the second half of the year, like you said, should look better for the business. Remember, margins have also come under pressure on back of rising raw material cost. Exports have seen a decline of over 26%. But the company, of course, strategically working on improving the way they sell and, of course, their distribution network too. Rural's been a problem. It's not just been a problem in this quarter, but the last quarter as well. So rural demand not seeing too much of a pickup in that sense. But from one company to another, we have with us the management of Sheela Foam, who will be joining us shortly to talk to us about their quarter as well. It was a tough quarter. Despite a 33% increase in revenue, net profit for the company has seen a 79% decline YOY. We will, of course, try and connect with the management to understand what's going on. Remember, they've also recently made some acquisitions that are revenue accretive as we see it. Rahul Gautam, Executive Chairman of Sheela Foam, now joins in. Hi, Rahul. Good morning. Thanks for joining in. Rahul, let's start with the numbers on the face of it. We've seen a 33% increase in revenue, but net profit is down 79% year on year. What were the primary factors that contributed to the significant drop in profitability, and what measures are you implementing to see that change and improve in the second half of the year?
So thank you. I'm sure that you are aware that we are going through a process of integration. We acquired Kurlon about a year back. It was October last year. And during this process, the streamlining of the back end, the front end, and all the services that has been taking place. Happy to announce that integration is almost nearing completion. And the impacts of that are getting reflected on the sales part of it. As far as the profitability is concerned, if I look at both the companies and compare it to that from the previous year, we have improved. However, all the benefits of the synergies and the other things are yet to come in, but they are in progress. And as I have advantage of looking at October too, that process is well on track.
Mr. Gautam, good morning. Niraj here. Been a while. A happy new Samvat to you. I wonder if the Samvat could turn out, the start of the Samvat, which is the first 6 months, could turn out to be good, because a lot of people believe that the government spends which haven't happened thus far are impacting both consumption as well as capex, and that turning around, if the government does indeed decide to go down that path, will improve the economic growth and thereby consumption as well. How do you sense this for your business as well as for consumption at large, sir?
So thanks, Yash. I'm in complete agreement with you. I think this shift towards a higher growth was just waiting to happen. Now, if it coincides with the somewhat changing, so be it. But as I see the next couple of months or 6 months, at least for our trade, for our business, for Sheela Foam Kurlon combined, I see that as positive. One thing which is, of course, giving us some tailwinds is also that the acquisition is about now a year old and the integration is nearing completion. So as a company, we have a little bit of an advantage compared to the segment per se.
And Mr. Gautam, so therefore, if this indeed turns around, would that help operating leverage and therefore operational metrics as well? Or is the margin hit for completely different factors? And would the new normal be what you've done in Q2 on the margins? Or could those improve as well with improved sales?
The margins will improve. In fact, the trend or the trajectory is upwards as these synergies kind of come in. And in the coming times, we just see that improving.
Right. So let's, I don't know whether you've moved on from margins. Can I go back into Kurlon? Let's talk about volume growth. Sleepwell volumes have grown 40%. Kurlon's volumes have grown 26% YOY. Would it be a fair assumption for us to make that this is the pace of volume growth we can expect from the company the second half of the year, with a clear bias that there could be upside risk to that number?
So the order of growth will not be very different. However, the numbers may not be as high as this because we must appreciate that this is just when the, as I said, that the integration is in its final lap. However, we would continue to see the full impacts of it happening, and the percentages may not be 43 and 26, but more like 20% as we go forward.
To assume that level will moderate, of course, because the heavy lifting has already been done in this quarter. With Kurlon, which you mentioned that the integration is on track, the anticipated annual recurring savings is expected to be 100 odd crores. You want to tell me whether those cost savings are being realized already, or when will they be realized, and what is the sort of timeline you've set out for yourself to achieve that?
So this 100 crores is based on the current run rate, and some of it we would have seen in the quarter which has kind of gone by, but the real benefits would come in the H2 part of it. We expect the entire 100 crores to be at the full run rate before the end of the financial year.
Mr. Gautam, so I believe you cited that you will probably grow at a 15% CAGR for the next 3 years. Correct me if I'm wrong. Would FY25 also turn out to be a year like that? Can we start off with that? Do you believe 15% in FY25 can happen?
So our expectations were really from FY26 onwards. However, we would see something which is not too far away from there, at least on the volume part of it, we would see growth of the level of between 10 to 15% as far as this FY25 is concerned. But we will be on track of it for the 15% CAGR from February onwards for sure.
Okay. The other is a slightly broader question. I mean, multiple, and because you are present, and again, correct me if I'm wrong, but at the premiumization end, that belief was that the Indian premiumization story, with the per capita being what it is, will only see a non-linear hockey stick effect. One, I see you talking about 15%. Two, I hear a corporate after corporate coming out and saying that it is not turning out to be as simple, and the categorization needs to be very specific for even premiumization companies to log in growth. So some will log in growth, some won't. What's your sense here on this?
So I'm quite in agreement with majority of them that premiumization, though that's a constant effort that we do as a company, however, is not so easy to do, and it is definitely category specific. So, for example, for our category, which is really not a top-of-the-mind category, it's a mattress is a mattress. I mean, to say that a good mattress and a bad mattress or a not so good mattress, to differentiate between the two, to communicate that, to let the people understand, experience it, it does take some time for that to happen. And in the last couple of years, there have been two major factors which have really tried to bring the ASPs down. One was which started off with COVID. Now that is kind of bottoming out. But the other one that is actually impacting is the e-commerce side. I was always thinking that e-commerce is not something that would impact us as a product, because it's a voluminous product. Sizes have to be accounted for, plus something which is not easy to exchange. I mean, I know companies are giving a 100-night free trial, etc. But e-commerce, as it grows, per se, people believe that you should get a better deal, and therefore that keeps driving the average selling price, and which is very contrarian to premiumization. Having said that, it's our job as a company, and now that as I said, we are settling down, our process will be to get back on this journey of premiumization. It will be slow, but it will happen.
Rahul, just one more question, because we do understand that you're trying to enter into new segments in newer markets, so Australia and Spain, where, of course, your top-line growth has been slower due to lower raw material prices as well. Could you tell us what are the plans for Australia? What are the plans for Spain? How is this going to, sort of help your top line and your bottom line going ahead?
So both Australia and Spain are very different from each other. Australia, we've been there for almost 17 years. It's a very matured market, settled market. Population does not increase. Everyone has mattresses, and it's only once in 8-10 years that you change your mattress. However, it's an economy where it's going to be stable. It's not going to grow too much, but it does create a lot of advantages for us as far as technology is concerned, marketing capabilities are concerned, product developments are concerned, and that's what it gives us. When we shift to Spain, and in Australia, we are a large market, probably the largest player in that market, almost about 35%. But when we go to Spain, we are a very small speck in the entire European market, which is the largest market in the world. There, we will grow. And in fact, if I will see the last quarter and plus any subsequent time, we have been growing at about 14-15% on volumes. The top line may appear a little subdued, and that's only because the raw material prices have gone down. But as far as quantum is concerned, so we see that as a good, steady growth market that will continue. Of course, both of these places being developed areas, we do cross-learn a lot from each other. We see them as steady and progressing. We don't expect any more acquisitions or anything like that. The focus is going to be on the Indian market, and I would say that if I look at the last quarter, what used to be once upon a time the India versus the Australia and Spain together, a ratio of about 65-35. Today we are already at 70-30. 70% is Indian market, and the focus is going to be on this market, on the Indian.
Got it. Mr. Gautam, great talking to you. Thank you so much, and we do hope that the hopeful recovery happens sooner rather than later for the industry at large and for you in particular as well. Thanks so much for taking the time out.
Thank you. Thank you very much for inviting me.
Thank you. That's Mr. Rahul Gautam of Sheela Foam with his thoughts on the space at large and on Sheela Foam as well. Hopeful of a 15% CAGR. This year's growth should not be too far away from that number. On that note, and on the note that the markets are not looking very good. In fact, the small caps are down about 1.7%, with the large caps being down 1%. We call it a day on this edition of India Markets Open. Thanks so much for tuning in. Up next is Talking Point. We start off the conversation with Bajaj Auto and then move on to a market guest, Rahul Arora of Nirmal Bang Johnson, to talk about the market picture. Stay tuned. Thanks for tuning into Talking Point. I'm your host, Niraj Shah. With me is Tamanna and Afcons Infra. Just mark that one before we get into the conversations, because a large IPO, the price band of 440 to 463, which was subscribed about 2.77 times, likely to start off on a tepid note. About 425 or thereabouts is where Afcons will possibly list, which is about an 8% downtick to its issue price. And you could argue part of it is on because of the markets, but you could probably also argue that at a point of time when the Nifty is down 8% in one series, the market mood isn't in the best of shapes to really reward new kids on the block. You know, the kids may be large size names like Afcons. The management out there ready to ring the gong. Unfortunately, the listing will not be a very strong one. So the prices come on your screen in just a moment out there, about 7% lower. Unfortunately, not the best of starts for Afcons. But, well, long game. Let's see what it does over a period of the next 6 to 12 odd months. Good morning, Tamanna.
Good morning. You know what I found, and the market will do what it does, but what I found very emotional was a comment from Shapur Mistry, who you see there ringing the bell, talking about Cyrus Mistry's strategic leadership being transitional in completely changing Afcons in its journey and saying it's helped Afcons shift focus to global ambitions from domestic ones. So Shapur Mistry, remembering Cyrus Mistry today is also something which is important, and at the end of the day, a very, very solid company. Let's be clear about that. Yeah. A very solid company. Maybe it's a bad time for it. The issue was also undersubscribed, and yes, it has had a bit of a dismal listing, no doubt about that. But let's talk about auto. Auto sector in focus, Bajaj Auto in focus. Rakesh Sharma, the Executive Director, joins us this morning. Mr. Sharma, pleasure to speak with you here at NDTV Profit, and thank you for giving us your time. Let's come to the numbers that we've seen for October. And, you know, let's start with what's happened with two-wheelers. A bit of a slide there, something that you were expecting? Or was this a little disappointing when you compare to what you had penciled in for the month of October?
Good morning. Actually, the outcome in October has been a smashing success, frankly speaking. Yeah, because, you know, let me just decode the October outcomes as per how we are looking at it within the company. Foremost, the important thing is to look at retails and retails during festive. The billing numbers, which is what we say is the sales to the dealers or wholesale, there's the time when we've gone into a destocking mode because we were stocking up in August and September, and then there is a surge in retails because of the festive, and therefore the billing to dealers drops in October and will continue to drop a little bit also in November because we are all preparing for servicing the high peaks of the festive demand. Now, to understand how the festive has gone, it is important to compare apples and apples. So it's important, the right thing is to compare this year's festive, retails in this year's festive with retails in last year's festive, which are different calendar days. This year, it's from 3rd October to, let's say, 31st October, though there is a little bit of a festive in the north, which will in the Bihar and UP, which will continue. And last year was 15th October to 12th November. So to understand how the industry and how the company has performed, we look at festive sales, retail sales in the festive period this year and in the festive period last year. So now when I look at this frame of reference, it's been a smashing month, actually, both for us, and I think the industry has also got lifted up with particularly the last 2 weeks of performance. Our area of focus, as you know, is the 125cc plus segment, which is almost 53% of the motorcycle industry. We have grown in retail terms upwards of 20% in that. Mm-hmm. And at overall retail sales, growth is there of about 11-12%. We have sold 200,000 plus Pulsars, and our overall festive sales is post-COVID the highest ever festive sales we have recorded. In our premium end, we have had the highest ever sales of both Triumph, and when you put Triumph and KTM together, then the premium bikes have done very well. At retails of 36,000 units or so, Chetak sales have also recorded an all-time high. And finally, the three-wheelers has come in with quite a smashing performance with retails of almost 56,000 units. You know, the previous high was somewhere around 45, 48. In that, there is an all-time high retails of 7,000 units of EV three-wheelers, which is all driving our towards leadership in that segment too. So actually, just looking at the billing data, as we call it, really clouds the thing. In fact, it.
So let me come on that point, Mr. Sharma, because you make an important point. The way you look at data, I suppose, matters, and today perhaps the way the street is looking at the data as far as Bajaj Auto is concerned is we are seeing an 8% drop in domestic two-wheeler sales year on year. You're saying that that is the sales to dealers, retail sales are even better, but it seems like it's exports that have driven this month's sales. And if I look at it in view of what you said in your con call after your last numbers, where you looked at festive sales outlook a little dimmer than what the street is expecting, how do I juxtapose the two? It's becoming difficult to get a clear picture. Is the two-wheeler auto industry under pressure or not?
Well, we have always said that the way to look at the market is retail sales. Billing sales is all about, every company, including ours, has their own approach to building up stock and managing stocks in the channel. And that doesn't reflect what is actually happening at the ground level. So in our internal discussions as well, or when we talk to analysts or to the media, our primary focus is always on how retail sales is happening. And that is all we are doing. Now, the only thing which is different this month is that the frame of reference is comparing retail sales of this month with the festive period of last year. Because if I simply compare October 24 retails with October 23 retails, you will find that our growth is in 30% plus. Because last year in October, there was only Dussehra and Diwali fell in November. So we are comparing like for like. And in that, so this is nothing new. It is always, if we have to understand the industry, it's important to understand the ground level consumption. And that is actually suggesting that the festive did start slow. The Dussehra run up to the Dussehra was a bit slow. We exited Q2 a bit slow. And our annual outlook was between 6 to 8% growth for the industry. It was dipping down to 5 to 6%. But the last couple of weeks in the Diwali markets particularly have been smashing. And that has lifted the whole industry. It has obviously lifted our performance up. And as a result of which, I think the forecast going ahead is back to, a healthy 6 to 8%.
Okay,
so I think
that's an important point, Mr. Sharma. Can I just come back to you on it? So the forecast, which was 1 to 2% after the numbers were out, the quarterly numbers were out for Bajaj Auto, and now that you have seen how festive has paired through, is back from 1 to 2% to 6 to 8%. Am I understanding this correctly?
Quite frankly, I don't know where and what this number of 1 to 2% is. We have always
has scared the market, this 1 to 2% number, and it's quoting you from the con call. So which is why I want to just put it into perspective.
No, it may have been for, there are many questions which are addressed. Now, if people are selective, then I cannot do anything about it. But it could have been, the September month. It could have been a week into the festive. I'm not sure exactly what that 1 to 2%, but we had felt that the growth will be between 5 to 8%. I think that is a point which we had been making. And in fact, the last 2 weeks, what is more important actually is how things stand now. And how things stand now, is, given the flourish of the last 2 weeks, I think it's been a very, very good festive period.
That's an important clarification from Mr. Sharma. It was always 5 to 7%, and the last 2 weeks of festive period have been very, very good. Is it possible for you to quantify it, Mr. Sharma, on how the last 2 weeks have been? And then I'll just add one more question to it, is do you see this sustaining? Is this a festive bump, which of course in the entire industry you see a bump during festive period and then you sort of peter out? What is the kind of numbers that you see sustaining through?
As I said, I quantified it by saying that in our area of focus, which is the 125cc plus segment, in this 30-day festive period, compared to the similar period last year, our growth in retail terms is above 20%. And at an overall level, it is, 11 or 12% in motorcycles. In electric vehicles, it is in triple digits. Now, so that is what the festive is. Now, obviously, a festive period, if the average sales in a month is about 8.5%, 9% for the year, arithmetically speaking, the festive period is about 12%. So obviously, there is advancement or postponement of sale, which bumps up the sale like in the festive, like you're saying. But when you start to see, the festive could have gone worse, and then that would have put some question marks about the months to follow. But I think the customers coming back to the purchase cycle in such strong numbers indicates that after the sort of dip, which is expected in November and December, things should be looking good, back to the kind of forecast we were doing of 6 to 8% for the fiscal, for the industry.
Got it. So, Mr. Sharma, one would presume, and good morning, one would presume, or am I presuming it correctly when I hear you right now, is that forget October because that would have two festivals bump up, but the trend seems to suggest that October plus November, or October, November, December put together could well have this 6 to 8% average growth rate YOY over the OND quarter of last year. Would that be something that you would believe could happen?
Yeah, for the industry, I would say that it should be in that zone.
And for you?
Difficult to predict exactly. But a good festive brings back, a slipping estimate which was slipping a little bit. It has brought it back very, very strongly. And I would say, yes, it is. We should be looking at, and it's important also to, if we have to understand the industry, to not just look at, 1 week or 2 weeks and be so sensitive to that. These trends unfold over a few weeks and months. So just taking a week out and seeing how it is growing is very, very misleading. So, but I think what you're saying, I would sort of support that kind of a thing. I would, in fact, extend it to the whole fiscal rather than, because again, you will see in November, there will be an impact. December is a low month because, people sometimes wait for the new model year, etc. And therefore, it is important to, at least from our perspective, it is important to look at the next 6 months. And this kind of exit from April to October creates confidence for the next 6 months.
Just one point, Mr. Sharma, on market share. So in October, at least in the domestic segment, there seems to have been some slide in market share. Do you see that coming back, buoyed by new launches? What is the outlook there?
See, again, the market share, I would, even for our internal analysis, I would wait till middle of November or end of November, frankly speaking, because the best way to look at market share is from Vahan. And the crush of sales is so high in the last 3 or 4 days that it does take time for Vahan to be updated. But having said that, but our estimate in our chosen segment, which is, 53% of the industry, which is motorcycle industry, which is the 125cc plus segment. Like I said, we've grown retails by 21%. And sooner or later, it will reflect in Vahan, like it will for everyone else. We believe that this part of the industry has grown less than 21%. It is, of course, grown, but less than 21%. And because we have grown faster, I would actually say that we have garnered some market share over there.
Okay, fair enough. We'll wait for those numbers. Thank you so much, Mr. Sharma, for coming in and speaking to us. And we'd love to have another opportunity to talk to you when we have clearer data on the last 3 or 4 days, since you've mentioned that the last 3 or 4 days have been important. Rakesh Sharma, ED of Bajaj Auto there. The stock feeling some heat, but then frankly, so is the entire market. I mean, it's really looking worrisome. Niraj, in the last 20 minutes or so, 15, I think 10 odd minutes that we've been speaking with Mr. Sharma, you have seen the Nifty give up 24,000. with completely no resistance, nothing to hold back. The bank Nifty really hurting right now. Heavyweights on the Nifty. Look at the top contributors. The Reliance, they're maybe the biggest drag on the Nifty, if I'm not mistaken. But yeah, that definitely the top drag on the Nifty. ICICI Bank, Bharti there. There's just a clutch of one or two auto companies which are holding up the flag. But otherwise, I mean, I don't like it when this term is thrown around. But this is the time to use the word bloodbath, perhaps, because of the severity and intensity of the fall in the last few minutes.
Yeah, VIX is up 8%, and frankly, it's not the banks or the Nifty IT which have corrected as much as some of the others. So Reliance clearly taking the baton of the losses, because 1.4% for the Nifty. Banks 0.75%, IT 0.5%. So the two heavyweight sectors are not correcting as much. Rahul Arora, CEO of Nirmal Bang Institutional Equities, with us as well. Rahul, you would argue, and thank you so much, Rahul, for agreeing to this request, because I know it was a bit of a last minute for you. So appreciate you accommodating this. But it's kind of playing out as per script for you. The Indian cricket team and the markets, both of them are not quite faring as per what people would want.
Morning, Niraj, and thank you for having me on the show. So I think, Niraj, this was, I mean, you probably heard it enough and you'll probably get bored with my answer, but I think this was long overdue. I think there was a certain reality check that was required in the market. Fundamental earnings growth was never supporting where the valuations were in the first place. And, you know, we saw that beginning with the defense sector about 4 months back. It went on to the EMS side, consumer durables, electricals. It slowly moved into IT services, then consumer staples again after the results, and now it's, you know, percolating into auto. So I think you're sort of seeing, Niraj, as we were discussing the other day on Mohra Trading as well, this is probably the worst earnings cycle that we have seen going into a Diwali in a long, long time. What is very evident, Niraj, is that the rural economy is in a mess. I think when you have Hindustan Lever coming out with 2-3% kind of volume growth, two-wheeler manufacturers giving you the kind of numbers that they are, DMart just about getting into teens in terms of top-line growth, and even certain consumer discretionary plays like PVR. I mean, you look at the stock of PVR today. I think that's also, you know, taken a bit of a knock on the chin, despite a big ticket Diwali release. So I think the problem, Niraj, here is the biggest earnings growth in India over the last 10 years has come in because of margin expansion, and over the last 5 years because of balance sheet deleveraging. So you've had debt come down, interest costs come down, and therefore profitability growing. From here, I think, Niraj, the entire onus is going to be on top line growth, and the visibility of that seems to be lacking. And I think the market is now adjusting to that new order reality. I still don't think we're going to fall off a cliff. I still think that, you know, somewhere around 22,000, we will find a floor on the Nifty. But I think the move to 26,000 now from where we began this fall could be a very challenging one.
22,000 is 2,000 points away, Rahul. So that is actually a worry, because we've cracked 8% odd in a matter of a month and some days. So that's been, as much as people would like to say that it's been a sideways move now, we had a very swift pull back because not too many people anticipated this in some fashion, even if the valuations were high, because the domestic flows kept on keeping the market afoot. You reckon that pillar and those numbers will come out in a matter of a few days would be a very important gauge of what the markets do? Because if the retail investor blinks and those SIP flows get impacted, that could be an even bigger problem, if you will.
So I think you've raised a very important issue, Niraj Bhai. And I think, you know, the point is a lot of investors who've come in for the first time in the market post-COVID haven't really seen a correction. So I think you've raised a very critical point as to how they react in the face of a correction, because they've just seen the Nifty go from 7,500 to 26,500. So this is something new for a lot of first-time investors as well, and flows will certainly be tested. But I think the fact that you use the word retail, Niraj, I think, you know, if you look at the defense, infra, a lot of PSU stocks, a lot of these were bought by retail and HNI. There was not a very large institutional holding that, propped up these stocks. Now, the interesting part is all of these results are stacked up in the second half of the result season, starting now to up to the 15th. So it'll be very interesting to see what kind of results they declare, and the reaction of the retail side of the market to that, because that is where the maximum ownership is. That being said, Niraj, I think, while you're saying that, okay, we're down about 10%, but look at the earnings cuts that have happened. I think in some cases, the earnings cuts are 10%, in some cases 15%, in some cases even 20%. So I don't think the market is not doing anything that is not making sense. It's cutting in line with the earnings cut. So let me give you a classic example. IndusInd Bank, right? We cut our own estimates by about 17% for the current year, and the stock was down 20%, and most brokers cut between 15 and 20%. So I don't think what's happening is senseless, for lack of a better term. I think there's a method to the madness. People were pricing in extrapolated growth, thinking that it will keep getting better. But I think a reality check has hit. So I think the one thing also that happened, Niraj, is, as you went into the general elections, earlier this year in May, I'm guessing the rural spending to the bottom of the pyramid would have begun in March, April. That effect has waned off. Now, there was a fund manager who recently told me, but VMart's results were good. But the counter argument to that was VMart's results were good on such depressingly bad numbers that they should actually have been growing 40-50%. So, I think if you have a situation where consumer discretionary plays are only going to be giving you the kind of earnings growth that we've been talking about, it goes back to the point we were making the earlier, a couple of days back, that, maybe money will keep chasing those and expensive will keep getting expensive. But, I think, Niraj, just look at the banking data that came out over the weekend, right? The sectoral deployment data that came out over the weekend. Credit growth is down to 13%. Housing growth is down to 12.5%. Services credit growth is down to 13%. So you're having a situation where credit growth in the banking system is also struggling to just about hold on to teens. The only thing that grew well in the sectoral deployment credit growth was the loan against gold, which grew by 50%. And gold has been a hot topic of discussion across the board over the last 1 month. That's the only thing that actually probably held up that 13% growth. So if banks are not going to contribute, if FMCG is not going to contribute, IT valuations are starting to look expensive, Niraj. Large caps are now trading at 30 or north, and mid caps and IT are trading at between 40 to 50. You're pretty much down to Reliance having to hold the market, because that's 75% of the market. So if three major pillars of the market don't take it higher, it's very hard to make a challenging case for the Nifty to go up. Again, like I said, I don't think the market is going to fall off a cliff. I think flows will continue to come. But I think if the Nifty was to head down to 22,000, and I'm not saying it will, I said it could find a floor there, it could become a fairly more attractive entry point for retail and institutional investors.
To play the devil's advocate, Rahul, just trying to understand, I wonder, government spending has trended lower in the first 6 months, arguably the first 7 months of the current calendar, right? Maybe because of various factors, including for whatever reason, it's way lower than what the averages should have been based on the capex spend target at the start of the year. If that picks up, and even if it goes back to trend from a 50 odd thousand number that they have it right now to the 90,000 number that should have been the trend number, does that help capex spends and therefore earnings recover? Trying to understand if what you've seen in the results thus far is a trend which will go into quarter 3 or quarter 4, or is it difficult to say if the government spending comes back?
No, so I think, Niraj, the finance minister has been very clear in her last 2 or 3 presentations to the country that she expects the private sector to pick up the baton. And I think if you see the rate of growth that she has projected for capital expenditure, it's, sort of been just about in line with what they have actually been doing in the past. She's actually made no bones about the fact that she wants private sector to pick it up. Now, as you rightly pointed out, I think there are political compulsions, and I think some allocations have been made to align states like Andhra Pradesh and Bihar. But I think even if government spending was to revive in a material way, Niraj, you're talking about these projects coming on stream with a long dated timeline, right? So let's say a chemical company or a cement company announces a 200 or 500 or 1,000 crore capex. Chances are this capex is going to come on stream only 18, 24 months down the line. So you're going to be looking at, revenue contributions only post FY 27, 28. So I don't know whether the market in this environment is ready to digest earnings that far out. So I'll tell you, Niraj, before this correction started, the entire street was on FY 27, valuations. Now the point is, They've moved literally a year forward saying, okay, these are the kind of upsides we have on FY26. So it all depends on your starting point. But I don't see a very major revival in capex from the government. And I think the finance minister has made no bones about it. And even if you do have that, it's slightly long dated. But Niraj, I think the point here being, if you take a look at railways or defense or capital goods companies that are government driven, these have healthy order books even today. It's not like they don't have healthy order books. The question is, will the execution timelines be met? Once they are met, will the government offtake those things that they have booked? And how will working capital and inventory be managed? So all of this, sort of feeds into your ROE, ROC, and therefore into your valuation. So it's a great long-term theme to play, but I wouldn't be too immediately excited, with it as a short-term theme.
Okay. No immediacy. Rahul, 60-second answer if we can. Are you disappointed with the FMCG names? 60-second answer, the way out of time completely. Is their lunch? Are other companies, including e-com companies, new age companies, coming to eat their lunch? 60 seconds.
Extremely disappointed, Niraj. I think there is something structurally changing in the consumer sector. I think Gillette has been a spectacular set of results. P&G was not too bad, but I think if you're looking at consumer as a basket, Niraj, I would still be aligned towards consumer discretionary, which is hotels, alcobevs, and selectively QSRs. Staples is an underweight for me, and we could potentially look at names like Gillette and P&G, which have come out with good results, and the stocks have been rewarded accordingly.
Okay. Rahul, out of time on this show, but would love to do a deeper conversation with you on what the structural changes are underway for the staples space, if you will. They've enjoyed high ROCs over the recent past, and you track it as closely as anybody that I know. Would love to get your thoughts there. But thank you so much for accommodating this interview request today.
Pleasure is mine, Niraj. Thank you so much for having me.
And that's all at the time that we have, viewers, on this leg of Talking Point. The market's not in a good shape. Volatility index has spiked 8%. Keep an eye out on the India VIX as well. Thanks so much for tuning in.
Benchmarks declines to a 3-month lows. The Nifty falls sub 24,000 while the Sensex falls to 78,600. Broader markets underperform the benchmark. And it's a sea of red across sectors. Oil and gas, real estate and consumer durables drag the most. In October sales in focus, two-wheelers continue to see strength while CVs remain the pain point. Meanwhile, IGL and NGL trade with cuts as the price of commercial LPG cylinders in major cities is hiked by 62 rupees. And it's a muted debut on the exchanges for Afcons Infra, shares listed at an 8% discount to its issue price. Welcome. This is Samina Nalwala. Now, the next 30 minutes will take you through all the action in the F&O markets. It's a very disappointing morning. The start of November has been weak for D Street, barring moderate day trade when the markets saw uptick in trade. We are back in the red and selling is across the board, with the broader markets underperforming the benchmark after seeing an outperformance in the month of October. Nifty 50 is down 360 points, down about 1.5%. We are well under levels of 24,000. 23,945 is what we have. The breadth of the market also looks weak, with most counters declining on the Nifty 50 in trade today. M&M is one of the few counters that's trading higher with a 2% gain. Cipla, Tech Mahindra, IndusInd Bank and HDFC Bank are trading muted. A quick check on how the Bank Nifty futures and the Nifty futures are trading. As we set up trade this morning, there was, remember, a premium and long built-up seen on Nifty and Bank Nifty. That equation now very quickly giving way. If I can just get the Nifty 50 futures picture, that should be helpful. Still trading at a premium with an increase in open interest of 6.5%. But the mood on the street is somber. It's a weak trade. It's an event-heavy week as well, with the Federal Reserve and an election outcome that the markets are closely going to be tracking over the next few days. Broader markets are looking as bad. The Nifty 500 is down 5.5%, and pain is across the board. No sector or stock is being spared, to say the least. Amongst your top losers, Poly Medicure is down 7%. PVR Inox is seeing a 7% cut. Chennai Petroleum, IOC, Hindustan Zinc, Blue Star, PCBL, Jubilant, Brigade are all trading with cuts of 5 to 6%. On the buy side, the picture looks slightly better. Sirma is up and about 5.5% higher. Motherson Sumi, Max Healthcare, V-Guard, AU Small Finance Bank are seeing marginal upticks in today's trade. We had a new listing. Afcons debuted on the exchanges this morning. The counter was well subscribed by the time it closed out its subscription window. But remember, the grey market was indicating to a discount. The discount was far worse in terms of what the counter opened at this morning. Recovered quite a bit from its day's low, but still trading in negative territory, down about 10 points, 2.5% lower on Afcons is what we have. So largely speaking, the mood is weak. It's unsettling, to say the least. We did catch up with the management of Afcons Infrastructure. Hear out what they had to say as they talk about what lies ahead for the company.
About the market's reactions, we are not the experts, so I would not be able to say how the markets would react. But on the performance of the company, we are going to work on it, and markets will see substantial improvements. And we are excited to be a listed company, because we will be, whatever happens in the company will come in the market, and the both plus and minuses will be reflected. So there is more accountability, there is more corporate governance. Overall, we are excited to be a listed company.
Yeah, and what we have seen is, like, as far as the subscription of the IPO was concerned, it only picked up on the last or the third day. Before that, it was slightly muted. What could be the reason? Do you think pricing of the IPO was one of the challenges because of the market volatility, which had affected it?
In our assessment, our pricing was advised by our BRLMs based on extensive international investors and domestic investors' feedback. And we could have had, along with the bankers or otherwise, more than 150 plus investor meetings. And our entity is compared by most of the investors with that of L&T. And if you look at some of our accounting principles like accelerated depreciation for TBMs and others, if you really look at it, and we are priced roughly at cash profit level at 1/3 discount to L&T, and at EBITDA level at nearly 50% discount to L&T. So we believe it has a definitive upside possibility for the investors, and we have been following strict corporate governance for the last 17 to 18 years, in spite of our not being an unlisted and in spite of not being a listed entity. Therefore, our own governance, which is kept private now, would come public, and I am pretty sure investors would value the governance standards of Afcons and the execution excellence of Afcons going forward.
Right. And with the visibility, more visibility, and also with this kind of listing, do you expect some kind of strategic partners or growth partners coming your way, or even investors in the company?
No, the listing would give us some few advantage. One, as we talked about our corporate governance and other thing, which was confined to Afcons, is something which will be known to the outer world. And second, it is perceived in the market, this thing with the international people, international companies, investors, everyone, a listed entity is far better corporate governance as compared to an unlisted entity. From that perspective, it creates a perceptual shift in terms of companies, international companies, and also others. And for international markets, especially if you look at going to developed markets, this could help significantly.
Okay. And he spoke about depreciation, faster depreciation. But if we look at the profit numbers, your numbers are like, slightly lower compared to the total revenue that you make. So what is the reason why you are looking at this kind of depreciation? And also, can it be increased going ahead?
No, our EBITDA margins, if you look at, they are the highest. The issue comes with the net profits. Yeah. And net profits is, as explained by Mr. Paramashwan, due to the accelerated depreciation we follow for our tunnel boring machines. Okay. If it is a normal depreciation policy is adopted, there will be 150 to 200 basis points upward number as far as net profits are concerned, and that is quite good considering the space we are in and the kind of projects that we do.
Okay. Going at the kind of proceeds that you will be making from this IPO, you said that you will be utilizing in corporate and also for equipment purpose, buying more of equipments. What are these equipments that you are investing into, and what's the role they are going to play for your company?
No, as far as use of the proceeds is concerned, 600 crores would go towards debt repayment. Okay. And another 320 crores would be for working capital requirements. 80 crores we have kept it for investments in equipments, okay, and 250 for general corporate purposes. But this year we are investing in 3 major tunnel boring machines for our high-speed rail project, which is a project which is unique for the country. 21 kilometer underground in between Chilpata and BKC, and 7 kilometer below the sea. 3 tunnel boring machines worth 600 crores we are investing, but that would be a special investment this year.
So that will be separate from your...
Well, that is the management of Afcons talking about the outlook for the company going ahead. Well, we do have Vinay Rajani, CMT Senior Technical Analyst at HDFC Securities, and Brijesh Ayal, both joining in of IDBI Cap. Brijesh, I'll start with you. How are you feeling about the markets? I mean, the fall is just not abating. I know implied Nifty was indicating to a flat start, but pre-open didn't look too bad, and now we are sub 24,000 with a broad-based brush in terms of selling pressure. Any strategy on the Nifty and Bank Nifty, either on the short side or long side?
Hi, morning. So the view would remain slightly cautious to negative bias. Definitely the way the India VIX is rising at 17.18, I believe this is going to be much more volatility will be there. And the way the Nifty has today broken 24,000, it opens up for the 200-day moving average, which is again close to 23,450 mark. So somewhere closer to those points are almost another 400 points or corrections from the current level. So my understanding is that there will be a sell-off. So at least this follow-through selling will be there. So any bounce we see, I think maybe in the money put option, that should be the strategy. So bias is negative. It doesn't look like it is going to cool off very soon. Over and above, we are done with 9% of correction from the all-time high levels. So I think somewhere closer to 10-12% kind of a correction, we should be forming a base. I will not be talking of that level as of now. India VIX need to settle below 13.5 level. So once we see those formations, then we might talk of the bottom or maybe the short-term support. But right now it looks weak. It is opening up for 23,500 mark. So today already the Nifty is down to 385 points. So by any chance during the end of the day, if we see some bounce or something, we can use that opportunity to get fresh shots from the trading perspective, 2 to 3 days kind of a time frame. So bias would be negative from the Nifty.
Right, the bias remains negative for Brajesh. Vinay, what about you? How do you feel about the street? Do you feel like there's still some more pain to come and hence would avoid any long trades on the Nifty?
Yeah, good morning. Yes, so definitely setup is weak. Nifty has already registered a fall of almost 2,300 points from the all-time high. So in the October series, Nifty has fallen by 7.7%, which is highest series to series fall since March 2020. So it is a huge fall after the COVID times, and definitely it is a weak setup only. If I go by the data, FI is also aggressively having seller into the cash market. In October series, they sold around 1.25 lakh crore. So aggressive selling in the cash market was also there. FI's long to short ratio reached to 0.29, though it is considered to be as an oversold sign, but still we can see after getting oversold, we are witnessing Nifty is falling by 400 points in today's session. So what does this mean? This means that FIs have actually rolled over their short positions in the November series from the October. So still they are actually see weakness in the markets, and whatever consolidation we saw in last 4-5 trading session, Nifty has actually broke down below that consolidation and fresh breakdown can be seen. And if we go by the technicals, Nifty has been trading below its 5, 10, 20, 50 and 100 days exponential moving average since long, and it has been sustaining below it. The only moving average which is still intact is the 200 days moving average, exponential moving average, which is currently placed around 23,500. So that is the only support as per the moving average setup. So we are below 50, 100 average, and now the next support is at 200 days average, which is placed at 23,500. So definitely the setup is weak only, though the positions by the FIs have been into oversold territory in the index future, but still I feel that this momentum could go down, because in India VIX we have seen a jump of 8% today, and tomorrow is a very important day, very crucial event, US elections. So that is going to be the uncertainty about the market. So the way momentum is picked up in today's trading session, I think very soon we are going to see Nifty reaching a target of 23,500 on the downside, and whatever low which was there previously, which was acting as a support, 24,073 or 24,100. That will act as a resistance now. So now it will change its role as a resistance from the support. So according to us, 24,100 becomes the strong resistance, and with that stop loss one should remain on the bearish side only, and I'm expecting that gradually Nifty would reach to the target of 200 days EMA, which is placed at 23,500. So definitely derivative data and technical setup is on the weak side, and we should remain with the trend, and 24,100 is a strong resistance, while 23,500 is the next downside target for the Nifty.
That's the mood coming in. It's a weak day of trade, and the sentiment is also down and out. Brajesh, I don't know whether you shared with us your call on Bank Nifty, but you haven't. If you haven't already, can you take our viewers through it?
Yeah, so, but somehow when I'm saying that Nifty, I'm seeing the weakness, I'm not seeing the same weakness in the Bank Nifty. So probably the Bank Nifty may not fall the way the Nifty is falling. So Bank Nifty, to be very precise, it is a very opposite view. I can see a bullish W formation in Bank Nifty, and even though when the VIX is down and Nifty is down, the Bank Nifty is hardly down by 380 points, and it is not breaking below 51,000. So my sense is that it is 51,000 or maybe 50,500. It's a very strong base for the Bank Nifty. It might remain sideways for maybe for some more couple of days till the time Nifty finds a base. And Bank Nifty may not break 50,000 is what my understanding is. I may go wrong also, but then this is what the technical structure is saying. The way the 50-day moving average and the RSI is placed, so it is saying that it is more of a time-wise correction more, as compared to price-wise. And to be very, I believe sooner or later this Bank Nifty will see an upside breakout. There were a lot of shorts there, 52,000. Definitely, there is a call writers are active, but somehow it's too early. But then I believe once we form a base, Bank Nifty will be the one to see the upside breakout. And whenever there is a breakout, this will be a very sharp breakout for sure. So 52,500 is the trigger which I'm keeping a watch on. Lower side, as of now, I believe 50,000 will not be broken. So by any chance with the market volatility, if the Bank Nifty comes to 50,500 or somewhere closer to those points, with limited risk reward ratio, I think somebody want to take a risk can take the long trades in the Bank Nifty.
Vinay, what about you? Do you feel like Bank Nifty may potentially warrant a long trade? Because all through October, it's been fairly resilient. In fact, it's outperformed the Nifty to quite a great extent. And it seems to be a consensus call that BFSI probably is best placed as we see it. Do you think initiating a long Bank Nifty trade is a good idea?
Yeah, so along with the Nifty, Bank Nifty is also falling, but it is relatively falling less. So setup, the technical setup is stronger than the Nifty, we can say. But we have to wait for the reversal. If market sustains and consolidates, in that case, we can expect some outperformance from the Bank Nifty. Data-wise also, if we go by the results-wise, the large-cap private sector banks like ICICI, Axis Bank, these banks actually are looking stronger on the charts, and downside seems to be limited in those stocks. And that's why Bank Nifty is sustaining very well. So we have to wait if some adverse outcome comes from the US election side or for any other reason, then the Bank Nifty will also fall. But as of now, in normal scenario, and we can say it can outperform. Definitely, it is looking strong. It is also placed above the long-term moving averages. So we can expect an outperformance. But taking a long trade as of now, it's not advisable because right now it is falling. It is almost at the 4 days low. So once market starts consolidating or some sort of recovery can be if there, then one can play a long trade in the Bank Nifty. So if you get a chance of pullback also in the market in the intraday session or in the coming days, then you should prefer going long in the Bank Nifty than Nifty. So yes, in that case, we can expect outperformance, but in the falling knife case, we should not try to anticipate the bottom. Let's see how it goes, but I am waiting for some pullback to come, and if it comes, then I will prefer going long in Bank Nifty, but till then I will wait.
Brijesh, let's get down to stocks then. Any trades on the long or short side? I know this would be a tough exercise to do right now, but nevertheless, let's give it a shot.
So basically today this healthcare and the pharma stocks are showing some kind of strength. Divis is one which is showing strength, so maybe probably some bounce can be. This is again a trading bet, not a per directional call. So one can take the long trade in Divis Lab. The stop loss would be 5,880 for the target of 6050. And the second bet is on the Motherson Sumi. So this is precisely from the derivatives point of view. At 180, there are put writers who are active, and that is giving support to this particular stock. So it is corrected, and I believe this 180 might be protected. So with the stop loss of this 180, I would take the long trade in the Motherson Sumi, and maybe 190 is the immediate resistance. But I think if everything goes right, then this 190 will be taken out, and closer to 200 will be the target for this Motherson Sumi.
Right. Vinay, what about you? What are your top recommendations coming in this morning, either on the long or short side?
So I would like to go short for both the recommendation. The first would be from the IT space, the technology space, the LTTS, L&T technology. So this stock has formed a bearish head and shoulder pattern on the medium-term chart and looks weak. It is trading below its important moving averages, so setup is quite weak. And the IT as a sector is also underperforming for last couple of sessions. I think this underperformance may continue in the IT sector, and LTTS is looking weak. So November future can be shorted here around 492028. One can go short. I would recommend stop loss at 5010, and on the downside I'm expecting a target of 4800. The second pick I would take it from the NBFC space, the Manappuram Finance, the gold finance company. So previously we witnessed, because of some reason, it fell with a significant volume previously. Then we saw a pullback rally. Pullback came and